on when you're talking. Committee would come to order. Without objection, the chair is authorized to declare a recess of the committee any time. The hearing today is titled Innovation Revolution, How Technology is Shaping the Future of Finance. And without objection, all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. And I might say at the top, there are very few surprises when you're the chair of the committee, other than what the opposition party or the other party does to you during a hearing. And there's been a few of those things from time to time, but this morning was quite a surprise to me because my staff, I said I wanted to finish the last hearing we have for this Congress of my chairmanship on technology and innovation, because that's been my focus in my service in Congress and my service on this committee. And my staff said, that's fine, we'll leave it there. We know how to do this, and we're going to surprise you. And there are very few surprises when you're in charge of the panel and you're in charge of inviting everyone. Today was a surprise. And then I want to thank in particular Grace Tricomi, Lindsay Shackelford, and Allison Puniak, because the 3 of them were the ones that really are messing with me this morning. And then I want to thank my colleagues and friends for also hazing me a bit by some of you wearing a bow tie for the first and probably the last time. And so I want to thank you for that as well. And thank you for none of you wearing a clip-on and pretending it's real. That's offensive. Almost as offensive as actually wearing a bow tie. But I do want to say thank you. And it's been a real honor and privilege to work with you in collaboration. And I've spent all 20 years of my service in Congress on this committee. I think this is the gem of a committee. It is the jewel of this of Congress. We have the most meaningful debates here and the most consequential policy set because it affects every family in America and touches the globe. And so, thank you. Thank you. Thanks. Thanks. I'll stop. Sorry. So I'll now recognize myself for 5 minutes for an opening statement. 40 years ago, my dad started a small business in our backyard. It was mowing other people's grass, and that's what I grew up doing. And the struggles that my dad talked about over the dinner table about how to build this business. And it was truly getting a lawnmower and mowing other people's grass. And that was what my dad, and I'm the youngest of 5 kids, and this is the business that he built. But he shared with us the struggles, and the struggles he had were getting access to money so he can get a lawnmower, riding a lawnmower because it's faster, you can be more efficient, you can mow more lawns, you get a return on that. And in the struggle to do that, he came up with the greatest innovation of its day, the greatest fintech of its day, which was a master charge. MasterCard now. They gave access to consumer credit. He got a MasterCard, and that's how he financed the truck that he put the lawnmower in the back of. How he got the lawnmower is he got an enterprising salesperson to let him demo the thing until he started getting paid. He was able to make payments to Toro. So the foundation of this, the fact that I knew my dad had a master charge, and that opened up the whole set of opportunities around riding a lawnmower in the back of a truck. And that is my sense of what the American dream is. It's one person, two women, a couple of guys, whatever it may be, establishing their American dream for themselves and living how they want to live. But the struggle of that was around money, getting access to a little bit of money to do something that may not change the world, but certainly change my world and my brothers and sisters' worlds. And so, that story is what has driven me in public policy and service in government, is trying to help the struggles of people like my dad. And so technology, I think, is the way to lower the cost and enhance the availability of credit and to the American people. And I think we should deploy it more readily. But my dad's story isn't at all unique. We see it in several places across the country, across the world. America was built on ingenuity and generations of entrepreneurs like my dad, building companies, innovating, and supporting workers. But today, for the first time in more than a century, America is falling behind Europe in technological invention, innovation, and adoption, and in particular, sound law for those things to occur. Under my work on this committee and our committee work, we're trying to unlock a new era of innovation opportunity to allow families across the country to realize their vision of the American dream. From capital formation to digital assets, consumer finance to artificial intelligence, the Financial Services Committee has led these efforts to ensure the U.S. remains the global leader in innovation. So let's start with capital formation, which is essential to creating long-term economic growth. American public markets have been constrained by onerous regulatory requirements. This has led to a dearth of IPOs, leaving Americans with fewer investment choices in their portfolios. Everyday investors have also missed out on the high growth stages of companies as firms stay private for longer. The accredited investor standard reserves these high yield investments to those who are already wealthy. That's not logical. The committee has prioritized capital formation by strengthening our public markets, creating new avenues for entrepreneurs to raise capital, and increasing opportunities for more Americans to invest in our private markets. These efforts culminated in more than a dozen bipartisan bills, and Republicans' Expanding Access to Capital Act as well, which also passed the House this Congress. Second, digital assets and blockchain technology promise to revolutionize the way Americans participate in our financial system by democratizing networks, reducing friction, and dramatically lowering costs. The lack of a clear set of rules of the road and the SEC's regulation by enforcement agenda over the last 4 years have pushed the digital asset ecosystem overseas. In an historic first, the House passed FIT 21 this Congress to provide clear regulatory framework and robust consumer protections the industry desperately needs to thrive in the U.S. It passed with overwhelming bipartisan support, including 71 Democratic votes on the House floor. Third, consumer finance. Financial institutions are increasingly utilizing technology to develop innovative products and services, expand access to credit, and increase efficiency across their operations. Unfortunately, overzealous regulators are stifling this innovation to the detriment of small businesses and consumers. Republicans have taken action to ensure our regulatory environment fosters rather than smothers these responsible innovations. We have worked to provide clarity for bank fintech partnerships through the true lender and valid when made policies, in addition to advancing legislation to create innovation-focused regulatory sandboxes, the latter of which has proven successful in my home state of North Carolina. Fourth, artificial intelligence. Earlier this Congress, Ranking Member Waters and I formed the Bipartisan AI Working Group. We recently introduced 2 bipartisan bills acknowledging the growing use of AI in the financial services and housing industries. These are the first of what I hope will be many legislative products resulting from the working group's efforts. Here in Washington, there's a lot to talk about innovation, but not nearly enough focus. The House Financial Services Committee has been the exception. Time and again, we've matched our rhetoric with action, and it's largely been bipartisan. When I became chairman, I said these 2 years of policy would set the terms of debate for the next decade. This body of work shows that it will. But as policymakers, setting the terms of debate is not enough for our work. I hope that many of these initiatives are seen through to enactment next Congress. I want to thank my colleagues for their indulgence this morning, and I want to thank them for the charity they've shown me as chair. It has truly been one of the most humbling times of my life. And thanks so much, and I yield back. I'll now recognize the ranking member, Ms. Waters, for an opening statement.
Good morning. I'd like to welcome our witnesses to the committee today for this important discussion around the future of finance. But before I begin, I ask unanimous consent to be recognized for a point of personal privilege.
I do so with a little trepidation.
Well, the purpose of my point of personal privilege is to acknowledge Chairman McHenry. Today marks his final hearing as chair of this committee and as a member of Congress. Leading this committee is no small feat. It demands a leader who values the importance of debate, who is thoughtful in seeking common ground, who is fair and respectful. This Congress, Chair McHenry, has embodied those qualities with consistency. His leadership has helped to keep this committee largely insulated from the chaos and drama that often characterizes Congress. Now, while the chair and I may not see eye to eye on every policy, it has been a pleasure to work with the chair on a range of issues. We worked together to pass the first of its kind National Emergency Rental Assistance Program, which kept millions of people housed across this country during the pandemic. We also worked together to provide a historic investment in community development, financial institutions, and minority depository institutions to ensure a fair and equitable recovery from the pandemic. And let's not forget how our work helped support thousands of small businesses by reauthorizing the Terrorism Risk Insurance Act and the Export-Import Bank. We also joined together to support people wanting to start their own businesses or to take their businesses to the next level by creating the first of its kind federal crowdfunding platforms and easing small business access to angel investors. Chair McHenry has long championed new and innovative ideas that can spur growth in our economy and provide opportunity. And over the past two Congresses, we worked relentlessly over several years to draft legislation around stablecoins. I have long appreciated Mr. Henry's commitment to good faith negotiation, and I'm hopeful he will pull another rabbit out of the hat to pass a deal into law before the year ends. Mr. Chairman, on behalf of committee Democrats, I want to thank you for your 20 years of dedicated service and leadership. I wish you the best as you embark on this next phase of your life and your career. And I hope that wherever you go, in whatever rooms you may find yourself, you'll remember what you accomplished here. I certainly will remember. And I don't think I will ever be able to look at another bow tie except for my husband's. Again, without thinking of you. Thank you again for your service, and I yield back.
Thank you. And if I may, to the ranking member, thank you. Thank you for your graciousness and how you've treated me personally. My kids love you. I don't want to ruin your reputation here. There's too much bipartisanship for it.
That's right, be careful, be careful.
But it's been an honor to work with you. It truly has been an honor to work with you. And I look forward to coming back here to see your portrait hung as among many historic firsts that you represent, and a whole generation of people that are in places of power because of you and your inspiration. And thank you. Thank you for your leadership. Thanks. And gentlelady is recognized for a...
Thank you very much. Now, today, we will discuss a vision for the future of finance. As we have gone through all that we have talked about with your, this having been your last day, I want to begin by thanking you again and hoping that we can open up this session in a way that will help us deal with innovation, revolution, how technology is shaping the future of finance. And so with that, I'd like to again make sure that our witnesses are feeling that they can share with us today all of what we need in order to move forward on this new venture that we are embarking on. With that, I won't take a lot of time. I'll just yield back the balance of my time.
I thank the ranking member, and we'll now recognize today's panel. And we welcome the testimony of Danelle Dixon, the CEO and Executive Director of Stellar Development Foundation, Avlak Kohli, the CEO of AngelList, Nathan McCauley, the CEO and co-founder of Anchorage Digital, Henry Ward, the CEO and co-founder of Carta, Alan Butler, the Executive Director of Electronic Privacy Information Center. We thank each of you for being here. Each of you will be recognized for 5 minutes to give an oral presentation of your testimony, and without objection, written testimony will be made a part of the record. We'll now recognize you, Ms. Dixon.
Good morning, Chairman McHenry, Ranking Member Waters, and members of the committee. Thank you for inviting me to testify today. My name is Danelle Dixon. I am the CEO and Executive Director of the Stellar Development Foundation. We are a nonprofit, US-based organization focusing on creating equitable access to the global financial system using the Stellar Network. I'm once again honored to be before this prestigious committee to talk about how the use of new technologies like blockchain has resulted in improvements and enhancements in the global financial space. After almost 6 years in crypto and blockchain, and many more in the technology sector, I can confidently say that innovation is not for the faint of heart. It requires perseverance, commitment, vision, and leadership to bring about change and help to create more effective systems. And sometimes it requires going up against strongly held beliefs fueled by misinformation and fear. Over the last many years, Chairman McHenry, Ranking Member Waters, and this committee have done their part to decipher the benefits, clear up misconceptions, and demonstrate the true value of innovation, all with a bipartisan approach that places the issues above politics. And for this, I am grateful. When it comes to encouragement to leverage blockchain and crypto where they work best, this committee has led the way. Both members and staff of this committee have long been working hard to understand the benefits of this technology and pushing to ensure that the United States not only realizes the opportunity these innovations offer, but leads the way on the global stage. We know that blockchain-powered innovation is not about replacing the existing financial system. It's about enhancing it. It's about using the right tool for the job and creating an interoperable and accessible global financial system. Digital wallets and stablecoins built on blockchain networks, combined with crypto-to-cash on and off ramps on Stellar across more than 180 countries and 475,000 locations, deliver exactly that, a better financial system for everyone. The use cases happening right now show the actual power of combining new and traditional technologies to achieve real-world results. From streamlining humanitarian aid disbursements globally to facilitating secure, cashless payments to workers in the global south, to reducing barriers to Americans to access tokenized financial products. This technology is improving access, removing barriers, streamlining the movement of money, providing new product opportunities for traditional finance, and saving millions of dollars for financial institutions and organizations that are embracing it. The strength and growth of the US dollar is also something that this tool set has already enabled. Stablecoins, which have been a big focus for this committee, have become an incredible tool for enhancing payments across the globe. Indeed, it is the US dollar-backed stablecoins that are in the highest demand globally. Stablecoins provide a global digital asset with price stability, enabling swift, low-cost transfers and easy conversion to local currency, thus addressing critical financial needs in volatile or underserved regions. And all of this matters in the US because the stablecoin market has now surpassed $190 billion, and almost 99% are all US dollar-denominated stablecoins. In practice, stablecoins are a way for people around the globe to hold and spend digital dollars. That's why the US must lead the stablecoin debate and not watch from the sidelines. In that spirit, Chairman McHenry seamlessly built upon the foundation that Ranking Member Waters established last Congress and has collaborated across the aisle and the industry to get legislation in place for innovators to take advantage of the digital asset opportunity. We praise Chairman McHenry, Ranking Member Waters, and this committee for working to create a more defined regulatory framework for crypto and blockchain, supporting legislation that would provide regulatory clarity without stifling innovation or preventing technological advancements. And in light of all that, and as this is his last hearing as chair of this committee, we thank Chairman McHenry for his tireless efforts and hope the spirit of championing innovation that Ranking Member Waters and Chair McHenry have used with respect to blockchain and digital assets lives on. Thank you for your time.
Thank you. We'll now recognize Mr. Coley for 5 minutes.
Chairman McHenry, Ranking Member Waters, and members of the committee, thank you for inviting me to testify today on the transformative role of technology in financial services and how it's shaping the future of our economy. My name is Avlok Kohli, and I'm the CEO of AngelList. AngelList was founded in 2010 with a bold vision. It was to accelerate the rate of innovation by building the infrastructure that powers the startup economy. We do this by serving as a platform where both emerging and established fund managers can launch, manage, and grow their funds. Today, AngelList supports over $125 billion in assets across more than 23,000 funds and syndicates that have invested in over 12,000 startups. Innovation doesn't just propel industries forward, it propels society forward. Startups are disproportionately responsible for technological, medical, and scientific breakthroughs and are a cornerstone of economic growth and job creation. Yet, the journey from an idea to a thriving business is fraught with obstacles, particularly in accessing capital. At AngelList, we work to remove these barriers by empowering startup investors that play a vital role in ensuring innovation can flourish and contribute to a stronger U.S. economy. I want to take a moment to acknowledge and thank Chairman McHenry for his steadfast leadership in championing policies that have made this possible. The passage of the Bipartisan Jobs Act in 2012, a landmark achievement for which he played an integral role, fundamentally reshaped the startup ecosystem. It introduced several key provisions that transformed how startups and fund managers access capital, enabling platforms like AngelList to thrive. For example, by allowing general solicitation, the Jobs Act modernized how startups and funds raise capital. For the first time, entrepreneurs and fund managers could openly connect with investors, breaking down geographical and network barriers. This has democratized access to funding, making it easier for promising innovators, regardless of location, to secure the resources they need. In addition, enabling platforms like AngelList to operate without the need for broker-dealer registration remains pivotal to this day. Without this, our platform could not scale to support tens of thousands of funds and startups, reduce friction in the investment process, and create efficiencies that benefit both investors and the entrepreneurs alike. And finally, the increase in the number of allowable investors in small venture funds from 100 to 250 has empowered a generation of emerging fund managers and has increased investor access. These managers now play a critical role in sourcing and supporting the startups at their earliest stages that drive progress across industries. While these advancements have laid a strong foundation, the financial system must continue to evolve to meet the demands of a rapidly changing innovation landscape. which this committee has done time and time again. With that, I'll call attention to 3 areas where targeted policy regarding emerging technologies can make a profound impact on unleashing innovation in the financial services sector. Number 1, harnessing AI. So with AI, first, AI represents the most transformative technological advancement of our time. It's reshaping industries, democratizing access to information, redefining innovation, and fundamentally altering the US economy. In financial services, AI empowers investors with broader access to insights and better investment decision-making tools. It also allows financial services firms to manage risk, combat fraud, and underwrite services at lower costs that unlock new business models. To realize this potential, we must adopt sensible AI regulations that encourage responsible innovation without creating unnecessary bottlenecks, as well as attract and retain the world's top technical minds to ensure the United States remains a leader in innovation. Second, modernizing the infrastructure. Startups and fund managers continue to struggle with the inefficiencies stemming from outdated banking and payment systems, which ultimately hinder their ability to operate and innovate at scale. Providing clear and consistent regulatory frameworks for blockchain-based technologies offers an opportunity to streamline operations, reduce costs, and accelerate the deployment of capital. Number 3 is enhancing liquidity. Startups are staying private for much longer to pursue ambitious long-term projects. However, private markets have historically suffered from illiquidity, limiting participation and capital efficiency. Emerging financial technologies are now reshaping this paradigm, opening new pathways to unlock liquidity and lowering transaction costs. Regulation should support innovative efforts to enhance liquidity that promotes reinvestment and further accelerates the innovation loop. The United States has long been the global leader in innovation. With thoughtful policies and continued collaboration, we can strengthen that leadership and build on the foundation that Chairman McHenry and this committee have laid out. Your work has been instrumental in fostering an ecosystem where innovation thrives, and I'm optimistic about what we can continue to achieve together. Thank you for your leadership and for the opportunity to share Angelus' perspective. I look forward to your questions later.
Thank you. Thank you. We'll now recognize Mr. McCauley for 5 minutes.
Chairman McHenry, Ranking Member Waters, and members of the committee, thank you for inviting me to testify today on how crypto and blockchain technology are shaping the future of finance. I want to especially thank Chairman McHenry for your historic work on digital asset legislation over the years, your success on capital formation legislation like the Jobs Act, and for serving as both chair of this committee and temporary Speaker of the House. I am Nathan McCauley, the CEO and co-founder of Anchorage Digital, an institutional crypto platform that is home to the nation's only federally chartered crypto bank. I'm honored to be here today to share my perspective on how crypto will play a role in the future of finance. True innovation, like railroads, the automobile, the internet, and of course, crypto and blockchain technology, does not come along every day. But when it does, it is our job as a society to make sure that we harness its benefits responsibly. It's not an easy task. We must strike the right balance between protecting the public without stifling innovation that will improve people's lives. Unfortunately, the US has ceded its leadership in crypto to other countries that are providing the regulatory clarity needed for innovation, for everything from stablecoins to crypto financial services. As a result, we are currently bleeding talent and capital and risk falling even further behind. But it is not too late. Right now, there's real progress on the horizon, but the US must get it right. Anchorage Digital Bank Charter allows us to operate under a national charter granted to us by the Office of the Comptroller of the Currency, the OCC. We are the first and only federally chartered crypto bank, and this allows us to provide regulated crypto custody, staking, settlement, and other services to our institutional clients. While this means we are subject to the highest security, compliance, and customer protection standards, it also means that we benefit from a level of regulatory clarity that continues to elude the rest of the industry. This is unfair, un-American, and anti-innovation. We are proof that sound regulation at the federal level can both protect customers and allow businesses like ours to innovate and thrive. The crypto industry and the American people deserve the same. My journey to founding America's first crypto bank began in an unlikely place, Economy, Indiana, population 168. I worked at McDonald's in my youth, but at night, I tinkered with the internet and developed an interest particularly in security systems. I began my career writing cryptographic key management software for military applications and have worked at the intersection of security and financial services ever since. In the mid-2010s, when Bitcoin and crypto started to take off, my co-founder and I were often asked to help crypto investors, including many institutions, recover the lost private keys of their crypto wallets. We realized that institutions would need to hold crypto assets in a way that was safe, secure, and regulated, and that we had the skills to build the solution. That was 7 years ago. Today, we are privileged to safeguard tens of billions of dollars worth of crypto for some of the largest protocols, investors, and sovereign wealth funds in the world. Institutional participation in crypto will only grow as they realize its potential to revolutionize our financial system. Fundamentally, blockchains are a way to transfer value that is secure, fast, inexpensive, and transparent, without the need for multiple centralized gatekeepers. The implications of this are profound. Financial transactions that would take days or even weeks to settle through legacy market infrastructure now take mere seconds on the blockchain for a fraction of the cost. Smart contracts unlock new ways for, say, artists or gig workers to gain more direct ownership of their output. Tokenized forms of non-financial assets will also benefit from blockchain's features. Take the state of California, for example, which recently placed 42 million car titles on blockchain to cut down on lien fraud by creating a transparent record of ownership that cannot be altered. This is only the beginning. As the uses of this technology evolve, Anchorage Digital is excited to play a role in providing core infrastructure to help power the industry's growth. Chairman McHenry and many on this committee recognize the transformative power of this technology early on, but also the need to provide clear rules of the road so that market participants had a way to comply, and so everyday people and institutions had the assurance they needed to participate safely in the crypto ecosystem. The US capital markets are the envy of the world due to clear regulatory frameworks that inspire confidence among businesses and investors and support emerging technologies. As we look to the future of finance, it is imperative that America extends this tradition to the crypto markets and sets the standard for the world. Thank you to the committee for this opportunity, and I look forward to answering your questions today.
Thank you. Thank you, Mr. McCullough. Mr. Ward.
Chairman McHenry, Ranking Member Waters, and members of the committee, thank you for the opportunity to be here today. My name is Henry Ward. I'm the CEO and co-founder of Carta, a financial technology company that builds infrastructure for the private capital markets. Private capital is the economic and innovation engine of this country, and we need to bolster and broaden its impact to more companies, more investors, and more communities. I understand this may not be a widely held view for many. Private capital, which includes angel investors, venture capital firms, private equity firms, and their investors, may not seem connected to the broader economy or aligned with the interests of everyday Americans, but it is, and it's integral to the story of Carta. We started Carta to build a system of record for equity ownership in private markets. And if we could solve the problem of private market ownership, we could broaden the ownership economy and expand that economic opportunity. I believed in this vision, but I could not self-finance it. No bank would give me a loan for an unproven product in an unproven market. So I turned to private capital. Investors gave me money, and I gave them a stake in our company. In January of 2014, we earned $120 from our first customer. As an entrepreneur, you never forget the first time someone pays you for something you've built. Today, Carta supports more than 45,000 private companies with over 2.5 million shareholders and over $2 trillion in equity. We provide fund administration services for nearly 3,000 funds, representing over $150 billion in assets. Carta sits at the very center of private capital, but we are also beneficiaries of it. Venture capital helped us turn a concept into a company, and private equity helped us grow, improve, and mature. That is not just a story of Carta, but of American entrepreneurship as a whole. Innovating and building is uncertain and volatile, and it takes time. Private capital provides a long-duration, risk-forward capital entrepreneurs need to pursue big ideas. As a result, venture and private equity-backed companies create the bulk of net new jobs in the US and have produced 50% of IPOs since 1980. Today, 8 of the top 10 publicly traded companies were once venture-backed startups. Entrepreneurship is core to our future, and private capital is what drives it. Carta is setting a new standard for how private markets should operate. We build the infrastructure connecting all of private capital, from founders who start companies to the investors who back them. Our tools bring transparency, accuracy, and trust to a private market that often lacks all three. And policy is part of that infrastructure. Policy can constrain growth, or it can unleash it. We see that in the work of Chairman McHenry and others on this committee. He is a policy leader that works on a bipartisan basis to expand investor access, broaden capital formation for startups, and help the U.S. maintain its competitive and innovation edge. He embraces the evolving technology landscape and has built a policy approach to realize its opportunities. Chairman McHenry leaves a large legacy, but also a model to advance policies that unleash American entrepreneurs and the private capital framework that fuels them. We can build on the work of Chairman McHenry to broaden the impact of private capital in three key areas. First, we should expand investor access. Private markets deliver strong returns and enable diversification for investors. They will continue to grow. Access to that growth should not be limited to the wealthy. Policy should create more on-ramps for accredited investors and allow retail investors to access diversified private funds. Second, we need to broaden the startup ecosystem to more communities. The key is empowering fund managers to invest early, invest locally, and invest diversely. We should bolster emerging managers by raising fund sizes and investor limits, as well as expanding qualifying investments to include things like fund-of-fund investments and secondaries. Third, we should consider how to modernize the regulatory framework for private capital. Industry expectations are evolving, including the need for faster, data-driven information. Technology advancements are one key to enabling this. The other is a regulatory regime calibrated to private capital that lowers barriers, reduces costs, and improves the ability for capital allocation. Private capital is our economic innovation engine, and our charge is to broaden its positive impact to more Americans. I look forward to working with policymakers to build on the great work of Chairman McHenry and the others that have already done so, and I'm pleased to answer your questions today.
Thank you. Thank you, Mr. Ward. Mr. Butler.
Thank you. Chairman McHenry, Ranking Member Waters, and members of the committee, thank you for the opportunity to testify today. My name is Alan Butler, and I'm the Executive Director of the Electronic Privacy Information Center, EPIC. EPIC is an independent, nonprofit advocacy group that works to secure the right to privacy for all in the digital age. We appreciate the focus that this committee has brought to the diminished state of financial privacy in America and the need for stronger protections. As the financial services industry continues to evolve in response to new technologies and new business models, it is more important than ever to ensure that consumers of these services are protected. EPIC supports innovations that make financial services more secure, resilient, and accessible for consumers while respecting the privacy of their data. That future is not guaranteed. It requires active engagement by businesses, policymakers, and civil society. Far too often, the term innovation has been used to obscure practices that are at bottom extractive and exploitative and do not serve the interests of the individuals that use them. We can and should aspire for better. Technology has the power to provide people with faster and more secure access to the world around them, to create new opportunities for entrepreneurship and financial security, and to increase trust in the digital marketplace. These positive innovations require adequate guardrails and robust oversight. There's no doubt that the last 2 decades have seen significant changes in our financial sector with the development of new technologies and business models, including the emergence of cryptocurrencies and other digital assets. New digital payment platforms and applications and crowdfunding have transformed the consumer financial marketplace. But it is important to recognize the new risks that have emerged over that same period and to recall that throughout history, evolutionary cycles in the financial sector have called for new and innovative approaches to protecting consumers against these new risks. Consumer scams and other frauds are on the rise, and identity theft continues to be one of the largest looming threats for Americans. Meanwhile, we have seen a broad and troubling trend towards commodifying and monetizing personal data, including sensitive financial data, in ways that enrich data brokers at the expense of consumers. In order to promote innovations in this sector that will empower consumers rather than exploiting them, we need privacy and security protections that are fit for the 21st century. As we look ahead and evaluate the vision for the future of finance, we should consider 4 key concepts: trust, security, privacy, and fairness. A healthy marketplace requires trust built on a clear set of rules and institutional guidelines. If trust is eroded, then our digital economy will not be able to thrive. And consumers can't well trust financial service providers if they feel that their data and their assets are at risk. In the current ecosystem, consumers have effectively no control over what happens to their data, and they fear that it is being sold and used without their consent. Their fears are well-founded. When businesses start to treat individuals as products or the raw material used to build products rather than as customers to serve, that trust cannot exist between them. We need to reestablish consumer control over data to promote trust in the financial technology. Security must continue to be a top priority in finance because it has become the most breached industry. But luckily, we are seeing important and innovative work on authentication, risk management, and infrastructure to secure financial data consumer accounts in the critical systems. We no longer live in a pen and paper banking world, and our digital defenses must constantly evolve to meet the threats. The financial services of the future should not be built on privacy models of the past. We need clear rules that limit unnecessary data collection and use. In the last 10 years, we have seen a rapid expansion in the scale of data collection and a fundamental shift in how that data is used and the impact it has on consumers. Privacy protections have not kept pace. Our current financial privacy regime is rooted in a stunted understanding of privacy protection and a narrow view of the industry. We need a new approach. Consumers don't want more privacy notices stacked in their recycling bin. They want to have actual control over what happens to their data. And ultimately, our privacy rules should align data practices of financial services firms with the interests of the consumers that they aim to serve. That means permitting data collection and uses that are reasonably necessary to provide consumers with these goods and services, while limiting unnecessary data collection and prohibiting secondary uses that don't serve the interests of consumers. These rules not only ensure privacy, they bolster security, because data that's never collected can't be breached. And we must continue to be vigilant against unfair business practices that take advantage of the power and information imbalances inherent in the financial ecosystem. Many revolutionary technologies also bring new risks. And the financial services sector evolves, standards of fair dealing must evolve with it. In the 1970s, during an earlier era of rapid change in the industry, Congress passed a suite of laws to protect consumers against new risks and establish a comprehensive oversight framework. Those laws continue to address the risks of increasing complexity, velocity, and automation in the field to this day. And without them, consumers would be worse off, and so would the businesses that grew under these regulations. The work of oversight bodies like this committee and the agencies charged with enforcing financial regulatory laws has never been more important. There's a real opportunity to build on the innovations in this sector to improve consumers' lives and establish trust in the digital economy, securing people's data from hackers and brokers alike, and shutting down unfair practices before they can take root and spread financial hardship. Thank you for the opportunity to testify today, and I look forward to your questions.
Thank you. Thank you for your testimony. I want to thank the whole panel for the testimony. I want to begin with you, Ms. Dixon. Stellar's transforming global payments. So let's get into this. Rather than getting into the description of how it's done, let's talk about the effect. What are the benefits of blockchain technology? Not just your network, but the underlying technology. What are the most promising innovations? What are the benefits?
Yeah, thank you so much for the question, Mr. Chairman. The most important piece here is that we forget that the global majority doesn't have access to the traditional banking infrastructure that we do here in the United States. And when you think about the fact that we would that the highest demand is the US dollar. They want to be able to leverage the US dollar, at least to be able to receive money from diaspora, from the US and from elsewhere. They want to be able to leverage that in a way that's cheap, efficient, and secure. That is what blockchain technology does for them. If you think about, there are several opportunities to discuss like the impact, but we have worked with the UNHCR to be able to deliver aid into countries throughout the world in a very fast and secure manner. Not only did it help the UNHCR from their security standpoint and to deliver aid quickly, it also made it so that it was much more secure for the people on the ground, so they didn't have to hold cash. The end user could receive, the refugee or the internally displaced individual receives the aid and is able to receive it within 3 minutes because of the fact that they can download the app and receive the aid right then and decide, do I want to push it to my bank account? Do I want to cash out in the local currency? How do I want to handle this? That's all done with US dollar stablecoins. And then when you think about, we just recently published a short documentary that talked about how in San Francisco, Colombia, there was an organization that was just starting up and they had to pay their individuals all in cash. And what happened is the CEO of that organization was impacted. He was actually held up because he had so much cash and he was nearly killed. He then started using blockchain technology with all of his workers, and not only did it support the work that they were doing, where they were able to receive the digital asset and then cash out at the MoneyGram locations locally, they then went and spent that money in the local stores. We call that the on-chain effect. So it's not
awesome.
just that it's actually leveraging the individuals, it's helping local businesses in areas where they might not have access to this kind of money. So
Well, thank you, Ms. Dixon. It's fantastic, and I think that gives us a great top line. Mr. Coley, AngelList has revolutionized our private markets, truly has, and particularly how startups access capital. Can you name a couple of companies that have benefited from your platform, and then talk about how does your vision for the private markets become reality?
Thank you for the question. In terms of the companies that have benefited, the most popular one actually is Uber. When Uber first started and they were raising their very first round of funding, they actually did it on AngelList. They actually met, I think, more than half the angel investors from AngelList itself. And in terms of the impact to the U.S. economy, I mean, it's pretty self-evident at this point. Outside of that, we have many other companies such as Notion, which is a productivity tool that has actually raised early capital from a lot of the fund managers on AngelList as well. In terms of what is necessary to continue build on this vision for the private markets, I'll actually second what Mr. Henry Ward said, where I do think opening up access to even more investors, being able to invest into private venture funds and giving them more capital to back early stage startups will allow 1,000 flowers to bloom. It means that even more startups will get created, even more innovation gets unleashed into the U.S. economy. And I would say really the highest point of leverage actually is increasing investor access, the number of investors into private venture funds.
Okay, so about that, Mr. Ward, you know, we've got a decline in the number of public companies. We see the best returns in the private markets. How do you think we address those concerns, or address that issue in a safe way?
Chairman McHenry, I think the historical view was how do we push more companies into the public regime, which I don't think is the right answer. There are companies that should be public, and the public markets are fantastic for them, where they're rewarded for stability, predictability, less volatility. And then when you want to work on bigger ideas or longer duration ideas, private markets are a better place for those companies. Instead of trying to push more private companies to go public early, my view is the posture should be how do we make private markets better run and better managed for companies, but as well as investors that participate in the private markets.
Thank you. And Mr. McCauley, Anchorage is unique that it's the only nationally chartered trust dealing in crypto and other tokenized assets. What's the benefit? What's the public benefit to you having a federal regulatory regime?
Chairman Kennedy, thank you for the question. Our benefit to the public is trust and transparency. So we are able to, as a national bank holding digital assets, allow our institutional investors to hold assets in a way that is compliant, regulated, safe, and secure. This benefits both the institutional investors that are holding with us and their downstream investors. For example, we custody for some of the large ETFs, and so we provide safe and secure custody for them, which provides a benefit to all of the underlying investors of those.
Well, I want to thank the whole panel for making yourself available. In particular, Mr. Coley, thank you for flying overnight. We hope to not keep you here all too long. With that, I'll recognize the ranking member, Ms. Waters, for
Thank you very much, Mr. Chairman. Mr. Butler, I'm pleased to have worked with Chairman McHenry on some bipartisan policy solutions, including improving access to capital while protecting investors and creating a legal framework for stablecoins to help our nation's consumers, working families, and small businesses. Another area where I believe there is room for more bipartisanship is data privacy. Consumers deserve ownership over their own data, which would include control over that data is shared. Years ago, I even advocated that consumers should be offered a check from corporations that use their data. The research shows that data rights help consumers make better financial decisions and increases competition by allowing them to switch from financial products that are not working for them to ones that better fit their needs. So, Mr. Butler, what principles do you see as most important when it comes to data privacy for consumers, and how would establishing these principles lead to better outcomes for consumers?
Thank you for the question, Ranking Member Waters. I think that you touched on one of the core elements there is choice, right? Meaningful ability of consumers to control what happens to their data, and that requires not only functional knowledge but real enforceable rights. Because in the general marketplace as we see it now, most of the privacy information that consumers are given is take it or leave it. Here are the practices of these firms on a piece of paper, and now but you don't really have any meaningful choice to make. You also mentioned competition in the marketplace, and I think there's difficulty in switching costs in the financial services industry that limit the ability of consumers to feel free to move from one system to another. That I think causes a limitation on the ability of firms to really compete on privacy practices. And I think ultimately a principle of data minimization, of aiming to limit the collection of personal information to what's actually necessary to provide these services, I think is a key concept that needs to be incorporated into the policies and practices in the field to better position consumers to make those choices and to be protected against those practices.
Thank you. I'd like to go to AI. Mr. Butler, with the rapid evolution of generative AI, I'm concerned about the possibility of creating new systemic risks in our financial market. The reality is that today, data collection practices for generative AI are largely opaque, and many consumers may be unaware of the details regarding the training data used in their AI services. My home state of California is working to address these challenges and recently enacted a law centered on training data transparency. This law requires developers to make public certain information about the data used to train their generative AI system. Mr. Butler, in your view, what kind of generative AI disclosures would be most beneficial to consumers? Could data transparency requirements potentially protect us against systemic harms like misinformation, discrimination, and data privacy risk?
Thank you for the question. I think that transparency is a critical first step, as you said, to training data sets in particular, because the ability to test and evaluate in a public and transparent way the source of the logic behind an AI system, I think is essential to be able to evaluate the fairness of that system and whether it implicates the type of systemic risks you mentioned in terms of disinformation or discrimination. If we don't know what data goes in, then it's really hard to evaluate the quality of the outputs that are coming from that system.
Thank you very much, and I yield back.
Gentleman yields back. I now recognize the gentleman from Arkansas, the vice chair and the subcommittee chair for digital assets and financial technology, Mr. Hill.
Well, thank you, Mr. Chairman, and thank you for the panel being with us. I have to start today by thanking our ranking member, Maxine Waters, for her comments about the chairman and the chairman himself for their collaboration in exactly this space of promoting innovation in financial services, both through a common sense approach that they took in this Congress on artificial intelligence by establishing our working group, which I thought brought a lot of good ideas to the table, and then their collaboration generally, while not in unanimity on every point to work on fintech and innovation, led with the work we've done on blockchain and FIT 21 and the stablecoin bill that Mrs. Waters and Mr. McHenry have spent so much time on. You know, I appreciate the staff passing out these bow ties, Mr. Chairman. I don't think they chose the Churchill bow tie accidentally. He was a small, mighty speaker in the House of Parliament that united the world against the Nazis, and I've been proud to see your small, mighty presence in the House as our 55th and a half speaker. as one of our extraordinary leaders in the House and your exceptional ability to unite this Congress that innovation is good for the American economy. So God bless you and happy trails as you depart.
And thank
the
you
House.
for your leadership, in particular on Fit 21 and that product that got such wide bipartisan support. I think it's a great foundation for our public policy here in Washington. Thank you for your great work on innovation as well. It's been great to have you as a partner and to work with you.
It's been an honor to serve with you. Recently, Mark Andreessen of A16Z went on Joe Rogan's podcast to talk about the abuse of government power that has continued under the Biden-Harris administration and how now crypto and fintech companies were targeted over the last 4 years. Here in the House, we've talked about this as Operation Choke Point. We saw it a bit during the Obama administration. A former member, soon-to-be former member, our Chair Blaine Luetkemeyer of our Financial Institutions Committees and those uncovered abuse by the FDIC. This story has reverberated and continues to, and the comments on Joe Rogan's podcast were the most recent. Now that Republicans have the legislative and executive branch united next year, I hope we'll be able to halt and reverse this kind of investigation that also Ranking Member Waters has spoken out against, debanking. Mr. McCauley, Ms. Dixon, you're both CEOs of major players in the digital asset ecosystem. Have your companies been debanked? We'll start with you, Ms. Dixon.
Unfortunately, the answer is yes. And it was a process where we've now had to go to, I think, 10 different banks to be able to create a sufficient.
What's the reason being given?
There is no reason. We were with a bank for the first 6 years of our life and never had any issues at all. And we also had other banks to support there. And then we received a letter that told us that they were closing our accounts. And
With no reason given.
no reason given. And when we pushed, we never were given reasons.
Mr. McCauley, tell me about Anchorage on this point.
Yes, unfortunately, Congressman, we've also been debanked. We were debanked in June of 2023 after the January 2023 guidance from the banking regulators, Fed, FDIC, and OCC, that came together and issued joint guidance warning banks from participating in the crypto industry. Our bank actually did tell us that they were debanking us because we were in the business of crypto, and it's particularly surprising because we ourselves are a national bank.
Have you heard from your banks that the examiners, the FDIC or the OCC examiners, did they communicate that kind of guidance to banks verbally or in writing? Do you have any background from talking to your bank officers, either one of you on that?
We were told that it was verbal.
I'm concerned about that because I think, as I asked Chairman Grunberg a couple of weeks ago, I think this is a sign that people perhaps are dodging the FOIA obligation they have in the federal regulatory system. That concerns me. We went through this on the firearms industry during the Obama administration. The paper trail was damning of Chairman Grunberg at the FDIC, yet he was reappointed to be at the FDIC and now will be serving essentially in disgrace as he concludes his term. But no one has any patience on that on either side of the aisle here. Legal businesses in the United States, in this great country, should have the freedom to bank and have financial services. And we've seen this over and over again, and this committee is going to take a strong position on that. We have the documents we're reviewing. We're going to continue that review through the end of this Congress and into the next Congress. Mr. Ward, the chairman has afforded me a bit more time, so I appreciate that. Let me turn to you. I believe so strongly in the ecosystem that you and Angel List represent here at the table on spreading capital availability and accessibility and affordability to more startup enterprises of all scales, whether it's an Uber or just a company in Little Rock, Arkansas that wants to go from 2 stores to 4 in the state. That kind of acceleration and mentorship is critical, but data is important, and you perform that function. With only 10 to 15% of Americans working for publicly traded companies, you've worked so hard to, I think, bring data to the benefit of employees of private companies. What could we do, working with our friends on the Ways and Means Committee, for example, to expand private company ownership for workers in private companies, say through the retirement system, through a 401k plan, for example?
Yeah, thank you, Congressman Hill. I'm a big advocate, and we've spoken about this, of the ability for employees to transfer, employees of private companies to transfer private stock from what I'll call their current account or their sort of taxable accounts into retirement or non-taxable accounts, deferred tax accounts. And the reason for this is that if you're a young employee today and you work for a privately backed, venture-backed company or a private equity company, your two main sources of financial wealth are, one, your retirement account that you've saved for, and the other is this private stock that you're holding. And you may have received this private stock as a Series A employee. It may be worth $100 today. Hopefully it'll be worth $1 million for you in the future, but you can't touch it.
Let me invite you to submit that answer further in writing. I'm very curious about your ideas there. I'm going to yield back, and I thank the chairman for the extra time.
We'll now recognize a gentlewoman from New York, Dr. Velasquez, for 5 minutes.
Thank you, Mr. Chairman. Mr. Colley and Mr. Ward, I heard what you were saying to Chairman McHenry about the businesses and entrepreneurs you were able to help. But I didn't hear how you were connecting rural and underserved small businesses and entrepreneurs. How are you connecting those businesses with investors? And if you can comment on the evidence that shows that diverse investors drive diverse investment.
Thank you for the question. Yes, we do have data, and we can take this back and share it with your staff. I will say that when you foster the creation of more emerging managers, especially not just centered around the Bay Area, but
Can you bring your, yes,
yep.
Thank you.
When you foster the creation of more venture funds, emerging managers, not just in the Bay Area, but across the US, they end up investing in communities close to them. And so that's really what we're focused on, which is how can we help create even more emerging managers, venture funds that can then invest alongside their communities itself. And the second way in which it connects is as you invest in companies that become these large tech companies, some of them serve small businesses in terms of banking needs, loans. Some of them serve small individuals in terms of Uber and Lyft and giving them more flexible ways to earn capital. So there are many different ways in which a small amount of private capital actually transforms the U.S. economy and transforms small businesses across the U.S.
I might add one.
But can you discuss, the fact that many members on this committee, Ranking Member Waters, Beatty, myself, Gregory Mix, we all care about the fact that in order to diversify the investment that is made toward rural and people that otherwise will not have an opportunity to access capital. Access to capital is access to opportunity. Mm-hmm. What can you do or suggest that should be done?
Yeah, in terms of giving more access to capital to rural areas, this is where I would look to incentivize more financial institutions, more fintech companies to get formed that aren't just banks, because then they can actually have innovative products to provide unique access to capital across communities in the U.S.
Okay, thank you. Mr. Ward.
Yes, Congresswoman Valdez, I think one of the things to understand is that the entrepreneurs will follow the capital, will go where the investors are, and the employees will go where the entrepreneurs are. And the more that we can reduce the costs of setting up funds, setting up investor communities, setting up angel communities, and we've seen this work in various regions. For example, Nashville, Austin, Texas, Boston's becoming a life science hub. There's these regional centers that are starting to form, and we can expand that to more and more regions as we attract more and more of that capital.
Thank you. Ms. Dixon, when it comes to utilization of blockchain technology in the financial services sector, that technology is primarily utilized to facilitate payments. But the technology is continuing to evolve. How can blockchain technology be applied to provide access to capital for underserved businesses or those located in rural communities?
Yeah, I can think of 3 ways, and thank you so much for the question. First, we have already tokenized assets, for example, in money market funds that are now issued by Franklin Templeton and others that allow people to come in at a much lower level. So before it was like $500, but because of the costs that they're seeing, they can come in and purchase those funds for like $20. So that's a nice way to be able to get access to some funds that way. But to get access to capital, and the second thing I'd say is that there's a way to be able to create like a smart contract that is very simple that allows them to be able to get access to capital from all over the world. So we're actually using this in different parts of the world and in the United States to be able to say that they can create an idea, they can post the idea, and then they can have people even put in $1 or $2 or $3 globally. This actually helps those people who can't be funded by the traditional funding sources. And then the third way, just the fact that they can actually leverage this new kind of infrastructure that connects with traditional financial infrastructure, but doesn't require the same kind of level of fees and level of access, brings them more into the market. So I love that this is what we fight for to do, is to bring this kind of capital and access to those who traditionally have been underserved.
Thank you. Ms. Dixon, one of the central tenets of our banking system is the separation of banking and commercial activity. Fairview's versions of stablecoin legislation I have seen fail to recognize this separation for stablecoin issuers. This would allow non-financial commercial businesses to own a stablecoin issuer. Do you believe it's important to maintain a separation between financial and commercial activity when it comes to issuance of stablecoin and other digital assets?
Yeah, thank you so much for the question. I think that we can actually preserve that, and I think we've done it, and I think this committee has done a nice job trying to preserve that with respect to the existing, the piece of legislation that was put together in a bipartisan fashion. You have the commercial activity from the payments and from traditional activity that most of these stablecoin providers aren't actually involved in at all. Those assets are being leveraged for payments, but they're not actually, they themselves are not participating in that piece. And then from the banking side, these stablecoin issuers that are not banks are not able to hold fractionalized reserves. They're one-to-one backed. That was an important piece of the legislation that we deeply support because we think that that actually protects the traditional banking infrastructure and also protects the consumers to have that one-to-one banking.
Thank you. Thank you. I yield back.
The gentleman from Texas, Mr. Sessions, is now recognized for 5 minutes.
Mr. Chairman, thank you very much. I, like my colleagues, want to join in thanking you for your service. We heard Chairwoman Maxine Waters join in. I think everybody on this committee recognizes not just your leadership, but also the direction. I first knew you 20 years ago when you came to Congress, and your not just focus upon capitalism, stability, and competition drew me to you to watch you, but also you're earning your way onto Republican leadership, which I sat at that table and watched you also. We had much in common about not just the future of our party, but the future of the country, which was always important to you. The opportunity to have your leadership for us, I think, brought forth those 3 characteristics: stability, competition, and capitalism. And I applaud you for it, and thank you as a lasting memory that I will have for you. I started on this committee under Jim Leach a couple hundred years ago and have watched with great fondness the development of not just capitalism, but competition, and certainly the word stability. Thank you. I'd like to direct the questions with the understanding that what we're trying to do here today is understand the innovation revolution that's happening to financial services and people's accounts, people's livelihood, their money, their need. I heard stories today that reminded me of my past. As I threw a paper route, I was encouraged to go to Ball Model Shop in Waco, Texas, before 5 o'clock when he got off work, and he'd give me a nickel for getting there early. I rerouted the things that I did so that I could incent myself to make a nickel. But I want to move to something that perhaps Mr. Butler got in line with in my thinking, because each of you talked about the digital age, transparency, speed, efficiency, faster, safety and soundness. I want to move us to something a little bit closer to me, and that is protection and security of accounts, not whether they're safety and soundness, but are they protected? And in the world of quantum computing and supercomputers, I've been led to believe in my own mind that there's nothing that can't be broken into with someone with a supercomputer. We have these we have state actors that are crooks. We have criminal gangs. We have all these things. Mr. Butler, maybe just go down the line real quickly. I've got 2 minutes left. Tell me, how secure are we to know that as technology changes, that the thieves, the people who want to steal America and individual assets, are taken care of? Mr. Butler?
Thank you for the question, Congressman. I think it is a critical issue for this digital age. We see certainly in reports from consumers out across the country that fraud and scams and identity theft are one of the leading complaints and concerns of those consumers. We see data breach ravaging the financial services industry. I think there's no question that we need to beef up our security, both of account access and of the fundamental assets in those accounts. And there's a balance with tools and innovations that increase the speed and efficiency of transfers, right, with the risk that the thing that can happen quickly can be a scam, right? A scam can happen in a single click, right, or a few motions.
Yes, sir, but I'd like to go to money sitting in an account, not the transferring, people stealing it from that account, supercomputers, people coming in and draining the whole fund. That's, can I direct you that way?
Yeah, I think institutional security at the bank, at the side of the financial institution, is a critical area of work and innovation continuing. I think one of the things that we've seen that's been promising is the sort of continued evolution of a zero trust view, where the institutions themselves have to approach every piece of computing and every communication as untrustworthy inherently because of the exact risks that you talk about, and then engineer backwards from that to figure out how they keep their systems secure. I think that's the type of innovation we need to see more of.
Anyone else?
I think it's a combat zone, frankly, out there, and the innovation needs to keep pace with the fraudsters themselves. So much of it is social engineering that happens, so it doesn't happen from a technology standpoint. It happens from us trying to figure, some of the bad guys trying to figure out our passwords and get in there. This is what we see with ransomware attacks. So I think that the technology is actually getting better and AI is gonna help to be able to prevent fraud risks and to prevent those kinds of pieces because it'll have a lot of data. But it is going to continue to be a combat zone, leveraging technology for the good and then the bad guys leveraging it for the bad.
Thank you very much, Mr. Chairman. At the sound of the last gavel, thank you.
Thank you, Mr. Sessions. And now we'll recognize the gentleman from California, Mr. Sherman.
Thank you, Mr. Chairman, and it's been a pleasure to serve with you for so many years on this committee. This hearing's about really three things: capital formation, artificial intelligence, and crypto. As to capital formation, there are three bills that are stuck in the Senate that I'm hoping all of us will call our Senate friends about, but particularly the chair and the ranking member of the Banking Committee, to deal with Mr. Hill's bill, the Fair Investment Opportunities for Professional Experts Act, Mr. Huizinga's bill, Accredited Investor Definition Review Act, and Mr. Hymes's bill, the Middle Market IPO Underwriting Cost Act. These are three bills that come before the subcommittee that I spend my time on that passed this committee unanimously, that have been held up on the Senate, and they should be hotlined. A couple other bills that I think we should urge the Banking Committee to hotline are two bills that end discrimination against disabled American veterans when we're dealing with veterans housing. We've got Ms. De La Cruz's bill, which we'll deal with on the floor today, and I hope we deal with on the floor next week with my bill, which is kind of, these are really two bills that are De La Cruz is the chief co-sponsor of my bill. I'm the chief co-sponsor of her bill. The Housing Unhoused Disabled Veterans Act, the HUD VA bill. So let's see if we can get these 5 bills through the process. Artificial intelligence, it's a powerful tool. It's already dramatically affecting Americans now. I'm sure there'll be outstanding, insightful comments from our colleagues as to how we can deal with it in the next decade. But I'd like to focus a little attention on the second half of this century, when perhaps artificial intelligence becomes not a powerful tool for good and evil, but a creature with its own goals. This is something I first spoke on the House floor about in the year 2000, when my staff told me to shut up and I sounded crazy. I've been talking about it more or less, and it sounds considerably less crazy every year since then. Trillions of dollars will be spent on artificial intelligence. There's no way to stop that. There's a lot of money, there's a lot of power, and there's a lot of good from artificial intelligence. But while we're spending trillions of dollars on making AI more powerful, I would want to work with others on this committee to propose legislation that we have a program, perhaps to spend 1% of the money being spent on making AI powerful, to monitor for and prevent self-awareness, ambition, volition, and self-direction of artificial intelligence systems. Certainly, if we develop a safety protocol, we can then urge the entire world to graft it onto their systems as well. I know this sounds like a science fiction movie, but our grandchildren are going to be living in a science fiction movie. We just don't know which one. Let's hope it's one of those boring ones like Star Trek, where humans are in control, and not a dystopian Terminator movie instead. Schwarzenegger has been in enough of those. Finally, Mr. Chairman, you couldn't really complete your service here without Sherman talking about crypto in a derogatory manner. But I want to do something that I don't often do, and that is praise the insight of Donald J. Trump. When he said in 2019, I am not a fan of Bitcoin and other cryptocurrencies, which are not money and whose value is highly volatile and based on thin air. Unregulated crypto assets can facilitate unlawful behavior, including drug trade and illegal activity. We have only one real currency in the U.S. that is stronger than ever. It's the United States dollar. But he's also been insightful just last month when he turned to the BRICS countries, Brazil and Russia and India, etc., and threatened them with terrible action if they develop their own currency. He recognizes that currencies that are designed to defeat the power of the U.S. dollar rob the U.S. federal government of literally trillions of dollars of finance by taking away the role that the U.S. dollar plays as a reserve currency, and undermines our system of financial enforcement, particularly with sanctions. And that's why he threatened enormous sanctions on India and Brazil if they move down that road. So why is he in favor of a new cryptocurrency? He is now the chief crypto advocate for World Liberty Financial, and he is for that because he can make money off of it. He was thought much more clearly before the prospect of billions of dollars of personal gain was put before him. I look forward, hopefully, to seeing the 2019 Donald Trump, and I yield back.
We'll make sure that's taken in context for the gentleman from California. We'll now recognize the gentleman from Texas, the chair of the Small Business Committee, Mr. Williams, for 5 minutes.
Thank you, Mr. Chairman, and I want to be brief myself, but I want to thank you for your leadership and your friendship. I want to thank you for working with me at Duke University for my wife. Appreciate that. I want to thank you for coming to my district to talk to business leaders and let them hear from the chairman. It meant a lot to me. I want to thank you for bringing your kids to an Gresham baseball game, watching you play catch with them and showing them that there can be something bipartisan, even though we scored 31 runs on them this time. And then also, I want to thank you in advance for buying your next car from me, as you get out of politics. And then I'm reminded of a scripture in the Bible that reminds me of you. It's Luke 6:38. It says, "A good measure be given to you, pressed down, shaken together, put into your lap. For the measure you give would be the measure you get back." You've given a lot. We appreciate it. Thank you. With that in mind, I'd like to say in recent years, artificial intelligence has grown and expanded into a technology that can revolutionize the landscape of financial services as we know it. AI in financial services enhances fraud detection, personalizes financial planning, automates customer support, and improves credit scoring and loan approvals through advanced data analysis and machine learning, among many other features. Congress must continue their understanding of how this technology can benefit consumers and build a solid foundation for future AI legislation so that it may continue to innovate and improve the financial services industry. So, Ms. Dixon, can you expand on how artificial intelligence has benefited the financial services industry, and what are some specific examples of these benefits?
Thank you so much for the question. Decentralized finance with AI-driven risk assessment is a really interesting and I think opportunistic tool that can be leveraged, because if you think about what's happening, AI is being used to analyze and to predict risk in decentralized finance platforms, and that's pretty huge because a lot of people get really worried about DeFi and about the fact that there's lots of folks that are coming into it and you might not know who's on the other side, but this actually helps a lot. A second one I'd say is smart contracts with AI for automated compliance and fraud prevention. So it's leveraging smart contracts, but it's also leveraging the AI component of it to enhance the smart contracts by automatically validating transactions and ensuring compliance with the regulatory requirements. So I think that's another really important piece. Blockchain-based identity verification with AI. That's huge, right? Because now we can actually see that this is where we get so worried about KYC, we get so worried about making sure that the financial infrastructure is intact. This can actually help us to be able to make sure that the person that's coming before us is the person that's coming before us. It's a real person. And then AI-based optimized blockchain trading and asset management. These are all tools that we're already seeing happen with respect to AI in the blockchain space and in fintech generally, and we think that it's a real boon to the industry.
Okay, thank you. There are many barriers for a business to enter the public markets, from rising costs to increased regulatory hurdles. Due to these challenges, the number of IPOs has dropped significantly since 2021. Instead of creating barriers to entry, we must create a more favorable environment for businesses to go public. By doing this, we can broaden access to diverse investment opportunities for everyday investors. So, Mr. Ward, could you elaborate on what you believe to be some of the biggest barriers for business that are stuck in the private markets and are looking to eventually go public?
Congressman, I think the regulatory requirements do provide a challenge for companies to go private to public. But I think one of the biggest challenges is the quarter-to-quarter cadence of public companies does make it challenging for companies that are not quite at scale, don't have that predictability, and aren't able to predict quarter to quarter how the business is going to perform, as well as if they have very complex business models that they haven't quite sorted out and have figured out a way to explain to investors. And I think that one of the charges I'll ask for is we should make it easier to go public, but we should also make it easier to stay private for companies that need to nurture in the private markets longer.
Okay, thank you. I've got a brief time, so Mr. Colai, quickly, what actions can Congress take to ensure entrepreneurs are able to raise money in the private markets in a more efficient manner?
I would say, thank you for the question. I would say the act that would help is, going back to what I said earlier, increasing the number of investors that can actually invest in private venture funds. If we can increase that further, because they're already accredited investors, are already at quite a high threshold, by allowing more venture funds to raise for more investors, a lot more of that capital will make its way into startups. And eventually, to your earlier question of how can more companies go public, it actually creates the pipeline of companies that can eventually go public.
Thank you, and I yield my time back.
Gentleman yields his time back. Thank you for your comments, Mr. Williams. I appreciate it. And now we'll recognize the gentleman from New York, the former chair and the current ranking member of the Foreign Affairs Committee, Mr. Meeks.
Thank you, Mr. Chairman. And first, let me just thank you for the way that you conduct the hearings here in the Financial Services Committee. You have truly been a statesman in trying to get things done, and you will be missed here. And I also want to recognize the great work that both you and Ranking Member Waters has gone into crafting stablecoin legislation over the course of the last two Congresses. The legislation is a remarkable step forward in clarifying the regulatory framework for stablecoins. And while we will no longer have you, Mr. Chairman, in your expertise and the passion that you have to draw from, I'm confident because of you that hard work will continue in a bipartisan way next Congress, and we thank you for that. Mr. McCauley, let me appreciate you for your confidence in the United States that we will get it right. I, too, want to make sure that we provide clear rules of the road where companies are held to account, consumers are protected, and innovation can safely flourish. In my home state of New York, the Department of Financial Services has created a first-in-class bid listening regime for virtual currency businesses, which we are proud of. So can you speak to the importance of preserving a state pathway in any future stablecoin legislation, while also providing a federal floor so that we don't see a race to the bottom?
Congressman, thank you for the question. And one of the great traditions in American financial regulation is the kind of shared responsibility at the federal level and the state level. Anchorage started out as a state-chartered trust bank and has converted into a national trust, so well acquainted with the advantages of keeping both, and would absolutely be supportive of that across trust licensure, stablecoin licensure, and any of the paths forward. A lot of the innovation and leadership that the NYDFS has shown has been helpful to the digital asset industry.
Thank you for that. And I want to continue with the theme of what Representative Velasquez. So let me jump to Mr. Ward, a few questions about the venture capital space. Although there has been a record high of total VC investments in recent years, only 3% of venture dollars went to women, African Americans, and Latino founders. And so can you please discuss some of the challenges diverse founders face when raising capital?
One of the challenges entrepreneurs have when they raise capital is by regulatory design, you can only raise capital from people you have a prior relationship with. So it's literally the definition of the old boys network, where you can only raise money from rich, not just people you know, but rich people that you know. And so it makes it much harder for people who are not networked in or do not have exposure to investors to find their path. For example, I came from Michigan, and I had to go to San Francisco to become a venture-backed entrepreneur because there was no capital in Michigan to do that. And the more that we can democratize both investors and access to those investors, and keep it away from a regulatory framework where you just have to know the person. And this is where I applaud Chairman McHenry and other members here of Regulation CF, Reg A, and other ways that we can create more access to investors that we didn't have before.
So would you agree that we can lower barriers without eliminating important safeguards to help emerging managers raise capital, compete, and succeed?
I would, sir.
Thank you. And let me jump back to Ms. Dixon. I appreciate in your testimony your statement that, quote, the true potential of this technology is to help reach those excluded from the current financial system. Broadening access and inclusivity in financial services have been my top priority throughout my career. You highlighted some important cross-border examples of how stablecoins can be a lifeline to communities. Could you expand upon how stablecoins may be beneficial to everyday Americans going about their daily lives, specifically those that have been excluded from our current system?
Yes, thank you so much for the question. It is the same here. There are lots of people in the United States that are equally left out of the financial infrastructure of today. And leveraging stablecoins to be able to send value, to be able to make payments, to be able to receive value from maybe diaspora outside of even the United States, it's being sent to them. Them being able to send money they work in the United States and they send money back to family. The fees can be upwards of 8 to 15%. This actually saves them a tremendous amount. downwards of like 2% on a global average. When you think about that, when you think about how many daily, how much in their daily lives can be impacted by leveraging stablecoins and leveraging a US dollar-backed stablecoin for that safety and that stability of that dollar asset, it changes everything for them. So it's the same in the United States. It's just we don't talk about it as much because we do have products that allow users like Venmo. But even with Venmo, for example, you need to have a bank account and credit cards to be able to make that work. With stable assets, you don't need to. So this technology is, it could be a life force for so many in the United States as well.
Thank you. I yield back.
Gentleman yields back. Thank you. Mr. Meeks, thank you for your friendship. We'll now recognize the gentleman from Georgia, Mr. Loudermilk, for 5 minutes.
Well, thank you, Mr. Chairman. And before I start my questions, I just want to, again, express my appreciation to the chairman for your fine leadership and your relentless pursuit of free markets. And I wish you the best of luck and Godspeed as you move on to further take advantage of what we fought for in the free market. And so thank you for all you've done. Mr. Ward, I want to start off just by asking about your company because I think it's a good example of how innovation replaces old systems with new systems to generate value. So could you just briefly describe your company and what it is you do?
Yes, sir. So 10 years ago, before Carta existed, companies were managing their shareholders and the investments of those shareholders on paper, stock certificates, and Excel spreadsheets of managing what's called the capitalization table. Carta, at the time called eShares, we essentially digitized that process, took away the paperwork, and put it in software, and that saved startups tens of thousands of dollars a year in legal fees, and we think helped lower the barrier for entrepreneurs to create their companies.
So how has all this created value for your customers, or how have they benefited from it?
Much like when cloud compute and AWS emerged, and suddenly the cost of starting a company went down considerably because you didn't have to buy all these servers and put them in a warehouse. You could just use the cloud compute that you needed. One of the biggest costs for these startups was just the legal fees to incorporate, set up the company, receive investment, issue stock. They were spending tens of thousands of dollars for that. We think we contributed in reducing those costs to a couple $1,000 a year, which created more entrepreneurs for more investors to invest in.
All right, thank you. Given the decline of public markets, it's no surprise that companies increasingly turn to the private market. You've spoken in defense of private markets in this committee before, but it seems like there is a growing skepticism among some of our constituents. Critics argue that certain private capital strategies saddle portfolio companies with mountains of debt and generally underperform the public market. Venture capital, on the other hand, seems to contradict at least some of the criticisms. VC firms make real investments in early-stage companies and generate equally real returns relative to the public market. However, the benefits venture capital offers to founders seem to be concentrated in only a few sectors. 77% of venture investments in 2019 were in the software and biotech industries. Why do you think that is the case?
Sir, I think one of the advantages of private markets is not just that I think it has a strong return profile, but is diversified against public markets. So when public markets go up, it's true sometimes private markets will go down because all the capital flows into these public companies. But at the same time, when public companies go down, private markets go up. And unfortunately, it's only sort of the accredited investor and above class that has access to that level of diversification of both having public and private exposure. Much like you would think of good investment strategies is to have equities and fixed income exposure, a good asset allocation strategy is to have exposure to both, and that's what we're advocating for.
Okay. So the venture capital market, as we know it, has existed for decades. Is the industry concentration we see today a feature of the venture capital model, or is it something that can be adjusted through policy?
It can absolutely be adjusted through policy. It is largely concentrated because we have not taken a regulatory framework and policy framework to it, and I urge all of you to start doing so, and we can broaden access to venture and private capital just like we did in the public markets in the 30s.
Supporters of the VC model often cite the intangible benefit of expertise for startups that may not have the acumen to scale their product or expand their market. Do you think the largest VC firms are well suited to provide this benefit outside of the software or biotech industries?
I do, sir, and I would say I'm a beneficiary of it. We would not exist today without our investors. We serve 2,000. We have 2,000 employees across the world, and most of that job creation was created because investors not only supplied us the capital to do it, but the connections, the network, and the support to do it.
Thank you. No more questions. I yield back.
Gentleman yields back. We'll now recognize the gentleman from Texas, classmate, Mr. Green.
Thank you, Mr. Chairman. I would like to join the chorus of persons who have decided that they would wish you well. I absolutely do. And we have had a relationship that has been very beneficial to both of us. And I think that if we can stay in touch with each other, we can continue to have a beneficial relationship. And I wish your family well as you traverse yourself into a new station in life. Thank you. I thought we should have given you a standing ovation, but I suppose what we did was okay. Thank you. Friends, I have a concern that has been called to my attention in many different ways. The concern emanates today from some intelligence shared by the staff. We have a great staff here. Here's what the staff has called to my attention, that last year, Goldman Sachs estimated that roughly 2/3 of current jobs are exposed to some degree of AI automation, and that generative AI could substitute up to 1/4 of the current work. My concern is this: what will the impact of generative AI be on job security as we advance? And I support the notion that we will advance, but how will it impact people who are working and are sincerely concerned about what will happen to them? The consternation that's developing is something that we have to allay. So let me start with you, Mr. Ward, and we'll proceed to your right, and then we'll return to the very last person on the end. Mr. Ward, if you would, please.
Yes, sir. Thank you for the question, Congressman. The analogy I use is when the calculator first came out, everybody who did math thought their jobs would go away. Everybody that knew how to use an abacus was terrified of the calculator. And in reality, what happened, of course, was people had to learn the calculator, but it created more jobs, not less.
Well, excuse me, let me just intercede. I remember I was in engineering, and we used something called a slide rule. You might remember that. Well, it has gone away, but the jobs associated with producing slide rules has gone away too. They've gone away. So I don't know that that's a good comparison for me because somebody had to make that product that we were using that we no longer use. But continue.
Yes, Mr. Green, but I would counter that with, but then we employed so many more people to create calculators. And that trade-off is a trade-off, that we should have taken. And I think that's true of, if you look at every major technological advance, for the last 200 years since the Industrial Revolution, jobs did not disappear, jobs just changed. And all technology has created more jobs, not less. I think that will be true of AI.
Okay. Well, perhaps I can avoid having everyone give a verbal response. If you agree with Mr. Ward, would you kindly extend a hand into the air? Saving one, all right. Let's have the one person that has an opinion.
Sure,
my eyes don't serve me well. I can't read your last name from here.
Butler, thank you. And thank you for the question, Congressman Green. And I don't, say I fundamentally disagree with everything Mr. Ward said, certainly, but I think I'll add that I think your concerns about the impact of automation on the labor and workforce are significant and real. And I think that as we see and track the adoption of automation and AI systems, we do need to be measuring and thinking about the impact on the current workforce. I think that that is one of the many real immediate impacts of these systems that we need to be considering and evaluating when we consider whether they're right to adopt, the other being of whether we're replacing good labor with bad output, which I think is true in many contexts, whether you're actually getting as much out of an automated system as you're getting out of human labor. And luckily, I think there's some policy interventions already to bring those type of evaluation into the analysis before we roll out these tools, but I think it's important.
Mr. Chairman, my time has expired, but as a courtesy to a friend, would you allow me one additional question?
Well, I've been so soft today. If you've been here all morning, you would have just kept going. But thank you. Go right ahead, Mr. Gray.
Thank you, Mr. Chairman. Bias. I read a lot about how bias in will generate bias out. How do we deal with the possibility of generative AI that amasses opinions from a lot of information? And if there's a bias in the information, then we'll get a bias in the product, work product. So how do we deal with that? Who'd like to be first? And be brief, please, because I want to maintain my good friendship.
I can just jump in and say, this is from my eighth grader actually did research around this, and I learned a lot from that myself. And I think that the importance of bias in the system is that we need to look at the outcomes that we want to see, meaning that we have systems that are not biased, that we have data sets, that we have LLMs that are focusing on all data instead of just a small amount of data. And I think that is where policy can come in to support, because we have to be able to set that standard that we're not going to have LLMs and other data sets that are going to bring that bias to work. We see this happening already, and we need to be able to stop that.
Thank you very much, Mr. Chairman. God bless you.
And God bless you, Mr. Green. And now we'll go to the gentleman from Oklahoma, Mr. Lucas.
Thank you, Chairman. And before I begin, I would certainly like to note that under Chairman McHenry, the committee's focused on both the state of financial services today and how the pace of innovation and new technologies will shape financial services tomorrow and for years, decades to come. I've been on this committee since 1995, and I participated in hearings on everything from Y2K. Remember when the Federal Reserve System ordered a massive amount of currency be printed by the engraving and printing just in case the banking system collapsed in 2000? Remember that? And the debates on mobile banking and electronic checks. And before the Basel Endgame, we looked at amendments to the first Basel Capital Accord, and then Basel II and Basel III. My point is, banking and financial services landscape has changed dramatically during my time on this committee, and the United States has been at the forefront of that change. And again, I commend the chairman for his work to try and keep us on that forefront, keep driving us forward. Thank you, sir. Now, a question of a general sense to the entire panel, and I'll start with you, Ms. Dixon. I do a lot of public interaction back home, and one of the great challenges we face in Congress in this day and time is explaining to the people back home why the things we do are to their benefit. Why do we do these things? Will I benefit from it? Could you speak in a broad way to the importance of the U.S. continuing to be a leader in financial innovation?
Yeah, thank you so
much. The real people back home?
Yeah, thank you so much for that question. I think that this is exactly the same thing that we have been, and this committee has been doing for years, is really trying to focus on the value of the U.S. Staying ahead of the curve and ahead of others. We see, for example, in my industry, where the U.S. actually started that process with respect to stablecoin legislation and market structure, and others leaped ahead of us. The challenge that we have is there's so many countries all over the world that follow the U.S. behavior. We like that because we can set the standard to be able to, at the level that we want, at the high level that we want, and then others will follow. If we don't continue to set that standard on a global basis, we lose not only the outcomes that we want to see and to be able to keep those structures in play, we also lose the ability, I think, for the strength of the US dollar, because the US dollar is so impacted by so many of the countries that follow our lead. So I love to see the work that this committee has done because it's really pushed itself forward.
Mr. Coley, any thoughts?
I would just add, when it comes to capital formation, how it impacts daily lives of Americans is that by allowing for more capital formation, we're actually allowing for more innovation to happen in the U.S. economy. A vast majority of companies that are public today were actually funded with venture capital, and so any rulemaking, any frameworks that can allow for more of that to happen means more of that innovation makes its way to everyday Americans.
Mr. Cully or anyone else on the panel wish to address that?
Sure. All of the constituents across America hold dollars, and dollars are central to what Americans care about. The work of this committee, particularly as it pertains to stablecoin legislation, has the opportunity to set America up to be the leader for the next century in financial dominance of the U.S. dollar, and this is an incredibly important topic to all Americans.
Congressman, I would just add one thing, which is I think the United States has always been an exporter of democracy and values. I think we should also be an exporter of technology, whether it's crypto, AI, just the way we do things, I think starts here. It's better for the United States if everybody in the world has an iPhone. It's better for the United States if everyone is using the crypto technology that we're building here. It's just better for anything that's better for the world is better for the United States.
Mr. Butler, would you like to touch on that?
Sure. I think I'd just add that the role that this committee plays as an oversight body in shepherding innovation towards a direction that can benefit and empower consumers, I think, is critical because some innovations create real risk. And someone has to be there to be a backstop so that when people go to the bank or when people use these new digital services, they can have trust and faith that they're not going to get scammed, that they're not going to lose their hard-earned money. And I think that it's critical that we have oversight bodies like this committee standing up to that.
Thank you. Mr. Chairman, as I yield back, I just simply wish to note it's been an amazing ride to watch your transformation in the last 20 years. From a very enthusiastic rebel-rouser on the floor to a very effective member of leadership in the body as a whole to your chairmanship in this committee. Job well done, my friend. Yield back.
Thank you, Mr. Lucas. And thank you for your kindness, especially in those early terms where I was learning. It wasn't quite housebroken, so there's a lot of cleanup after me.
Occasionally the puppies need a little help, yes.
Thank you, Frank. We'll now go to the gentleman from Missouri, Mr. Cleaver, another classmate.
Mr. Chairman, yes, there are only two of us on this side remaining from our class 20 years ago, Al Green and me. The public thinks that people stay here for 40, 50 years. Most of our class is not here, and that goes for all of the classes. And oftentimes when we believe or consider that we're moving away from something, we are in fact moving towards something. And your towards something, I believe, is going to be blessed, and I ask God to bless you and your family as you go into this new arena. I always acknowledge, what probably is giving myself away, that I'm not a troglodyte when it comes to AI and new things. I'd like to believe that I'm actually open to things. I do have to confess that I am very, very nervous and concerned about AI. Now, we've been warned for some years now, if we were paying attention. We were warned by iRobot, The Matrix, The Terminator, and most fascinatingly, the movie Her, which was about this guy who actually falls in love with a thing. A heartbroken man ends up falling in love with an operating system with an enchanting voice. So I'm concerned about this. My son is an actor. They were on a picket last summer. The number one issue that they were concerned about was AI. And I've seen some of the things that can happen with AI. So I'd like, if you would, if we could respond to this, I'd like you, Mr. Butler, respond to an issue of concern, this issue of concern. You know, research shows that more than half of all Americans have tried out generative AI in the last year, just the last year. And if harnessed in a responsible way, I acknowledge that AI advancements like generative AI have the potential to democratize opportunities. But I think there are also great risks in spite of the fact that there are some unique opportunities. In your view, Mr. Butler, do you believe that companies and other organizations developing and deploying generative AI need updated guidelines specific to the risk this technology presents? And how far behind are we, this committee and Congress?
Thank you for the question, Representative Cleaver. I think that there's a lot of work still to be done, especially here at the federal level, to catch up in terms of providing guidance and direction on risk, especially the process and sort of and standards for assessing risk of different types of AI systems, including generative AI. You know, as an example, in California, their new regulatory agency out there recently proposed a suite of regulations that impact automated decision-making systems that have a significant impact on individuals in terms of finance, in terms of housing, and setting standards for assessing and evaluating efficacy and bias as 2 points. And I would also tie back to the point that Representative Ranking Member Waters made earlier about transparency. If we don't know what data is put in, then it's really hard to evaluate that efficacy and bias as to what's put out. So I think we have a lot of work to do on that front.
Yeah, I'm also concerned. I mean, you know, anytime we create something that is in fact mimicking human thinking and decision making, I don't know how we. And I guess over time we're going to do something. I would hope to be reassured by this group of kind people giving us their time. But you know, how far are we from you know, algorithms that can change themselves without human direction? Is that Star Wars? Is that too far out there?
Yeah, I mean, I think that it's a really important concern. I think also the black box nature of a lot of these systems makes them inherently hard to evaluate, which I think raises fundamental questions about how do you govern, how do you create guardrails for systems if the people that build the systems can't really explain to you how they work and how they come to their reasoning or their conclusions. I think that's a fundamental challenge.
Thank you, my friend. I will now go to the gentlelady from Missouri, leader of our capital formation agenda, Ms. Wagner, for questions.
I thank you, Mr. Chairman, and like others, before I begin my questioning, I'd like to take a moment to thank our esteemed Chairman Patrick McHenry for his years of leadership, not just on this committee, but in Congress. And Mr. Chairman, since I first arrived in Congress, you have been a great friend and a mentor to me. And I am forever grateful for the leadership roles that you have entrusted me with and on this committee over the years. And I am proud, very proud of the work that we've done together, all of us collectively. And I want you to know that this institution is better because of your service, sir. I will miss our candid banter, I'll call it, and your sage advice. We will all miss you here, but are so very excited for you and your family and this next chapter of your life. I do have some parting gifts, and I'd also like to enter into the record several letters that this committee has received from various institutions about your leadership and your strength and your character. So,
Thank you. Thanks. Without objection.
and now I shall move on. Mr. Coley and Mr. Ward, retail investors are statutorily allowed to invest in private investments, including private funds via closed-end funds, which are subject to important protections under the Investment Company Act. However, SEC staff, through informal guidance and not rule-making, has prohibited a closed-end fund from investing more than 15% of its net assets in privately offered funds, unless the closed-end fund's shares are available only to accredited investors. That's why I sponsored bipartisan legislation with Representative Meeks, the Increasing Investor Opportunities Act, to overturn this informal SEC staff position and allowed closed-end funds to more fully invest in private funds. Earlier this year, this important legislation passed the House with significant bipartisan support. Do you both agree that if enacted, this legislation would benefit not only retail investors, but also the startups and the small businesses working to innovate and contribute to our economy? Mr. Coley?
Thank you for the question. Yes, I wholeheartedly believe it would actually increase the amount of capital that eventually makes its way to startups, especially at the earlier stages. And we definitely are fully supportive of more formal rulemaking around this topic.
Mr. Ward?
Yes, ma'am. We support you in the bill, and we're very excited that you're proposing it. Thank you for doing that.
Well, let's hope it gets some traction here soon. Mr. Coley, to become an angel investor, you typically need to meet the standards of being an accredited investor again. Current accredited investors' requirements unfairly restrict access to the private markets to only wealthy investors. This Congress, the House, passed multiple bills originating in my subcommittee of capital markets that would expand the accredited investor definition, thereby increasing the pool of investors for small and emerging companies. Can you explain how these bills would promote innovation?
Thank you for the question. Yes, I believe that expanding the accredited investor definition from being a quantitative read of someone's assets to a more qualitative judgment of the individual will actually significantly increase the amount of capital that can get invested. And we fully support the change in that definition.
Mr. Coley, Chairman McHenry has been working on it to enable crowdfunding for over a decade in Congress. Crowdfunding can be a great way for founders who would otherwise be overlooked by traditional funding sources to raise the capital they need. Can you explain why a startup would choose to raise capital by crowdfunding, and how can we continue to improve crowdfunding regulation next Congress?
Thank you for the question. Yes, there are actually two reasons why startups ultimately would choose a crowdfunding path. First is to be able to bring their customers along the journey with them, and we see this quite often with startups. And the other reason is if they don't fit the category of what we think was a venture backable startup. And venture capital ultimately goes for bets that can make a company become the next Google or the next Tesla. But there are many other startups out there that don't have that ambition. They actually want to build a great lifestyle business, and crowdfunding is a very productive avenue to do so.
Thank you. My time's expired, and I yield back to our esteemed chairman. And thank you again for your service.
I thank my friend. I appreciate all of her honest counsel in good times and bad. And thank you for your leadership on this committee. That gavel fits nicely in your hand, I know, and you have designs on others. So wish you great success. We'll now go to the gentleman from Illinois, Mr. Caston.
Thank you, Mr. Chairman, and we will miss you on this committee, and wish you all the best in whatever follows. I want to talk a little bit just about some of the premise of this hearing, because I think there's two very different ways to describe the narrative of what's happened in public markets since the 90s. One narrative, which I think has been told quite extensively here and in the preparatory materials, is that it's harder to go public. Fewer people were saying the decline of public company IPOs, of the burdensome nature of regulation, and we all have heard that story 1,000 times. There's another version of that story that says that institutional investors woke up in the 90s and said, maybe we can do things besides just investing in stocks and bonds. We can allocate to alternative investments, chasing yield. Endowments, pension funds started to run in that direction and opened up tons of opportunities that didn't exist before for funding. Those are both valid stories. And what I find somewhat strange about this job that I'm in now is that I was 16 years in the private sector before running private equity-backed companies, and I only heard that second story. Since getting to Congress, I've only heard the first story. And as I think back to my time, I was jealous of my fellow CEOs who ran public companies, because they didn't have some annoying punk 25-year-old recently minted Harvard MBA telling them how to run their business every day, who was very sophisticated, of course, but had opinions that didn't match my wisdom and entrepreneurial vision. And I would lament to my public company CEOs about how much more freedom they had, because they had a diffuse set of investors, and they would say to me, hey, the grass is greener on your side of the fence because I've got all these disclosure rules. I think both of us were right in our own way, but both of us were constrained by the burdens of investor protection. In my case, I could not raise capital except from sophisticated people, and in their case, they had disclosure obligations to protect unsophisticated people. And the concern I have is that if we only listen to that first story, then we're going to say, our mission here is to increase liquidity, increase access to less sophisticated people, and do nothing to actually protect them from all those crimes. And I'm going to be candid with you. Like, if I was still a CEO, if I felt like my job here was to protect our nation's beleaguered CEOs, I would push for opening up as many unsophisticated players to capital markets as possible, because it makes the nation's CEOs' lives much easier. I'm not sure it's good public policy. So I guess I want to start, Mr. Coley, you had suggested that some of the illiquidity in private markets limits participations, but that innovation can fix that. And I guess I just want to understand from you, do you believe that that is fixable in the absence of a robust regulatory regime to provide investor protection? Is this just a technological fix, or do we need to also do things to make sure that that expanded liquidity provides protections for people participating in that liquidity?
Thank you for the question. Yes, I do believe that without opening up access to the private markets to unsophisticated investors, there's still rulemaking that can be done to allow for more liquidity to flow within the private markets. I am actually with you that we want to be careful about opening up the private markets to unsophisticated investors. The private markets exist and do a great service to help these young, hungry startups to build a stable business over time, such that by the time they hit the public markets, they're stable, there's predictability and reliability, and I do agree that you want to have that separation between the two.
Okay, so we still need the investor protection. And then, Mr. Ward, you had testified, I think when you were here a year ago, and I hope I'm not misquoting you, to the extent that financial markets are always led by institutional investors and retail follows. I'm intrigued, and I think you and I have spoken before about this idea of sort of, a public fund investing in private funds. Would you be supportive of making sure that those vehicles, that the people who are participating are the sophisticated institutional, because I personally feel better about that if you're saying, okay, I trust that Fidelity is going to manage this well. But that's a separate question from, Ma and Pa Kettle. So would you support appropriate constraints about who can actually participate in those public funds of private vehicles to ensure that protection is there?
Congressman Caston, I loved your framing of the first or the second, and I'm actually a believer. I agree with you in the second. I do think that the idea that unsophisticated investors exist in the private markets but not the public is an old one. That how many public market investors actually read a 10K, for example, or a quarterly earnings report.
Well, there's sophistication of knowledge and sophistication of can you afford to lose what you're losing if you don't read, right?
For sure, sir. And I think, but there's no limits on how much they can afford to lose in the public markets as well. And so I would argue that I agree with you. I think more access to private markets is the right way to do it, but it should be structured access. I'm not a huge believer that anybody could invest in any company at any time. That professional management, at least to start, is the right way to liberate the private markets.
Okay, well, I see I'm well overdue, but the chairman's generosity is continuing, so I appreciate it. And I will now yield back.
The gentleman from Michigan, the chair of the Oversight Subcommittee, previous chair of the Capital Markets Subcommittee, goes on and on and on. And I see that you and Mr. Barr are here at the hearing. Mr. Hill and Mr. Lucas were here as well for their questions. And I know that the four of you were here just to make sure that this is, in fact, my last hearing.
Trust but verify, Mr. Chairman.
Yes. And the gavel will fit all four of you very, very well. And I look forward to seeing the outcome of the steering committee and wish you great good luck, Mr. Ising. And thank you for friendship. And gentleman's recognized for
I appreciate it. And let me just start there. I'm not sure how you do it, Mr. Chairman. In fact, I'm not even sure I want to do it. These confounding things around your neck every day, I would have been here 45 minutes ago, but it took me that long to figure out how to change out of my regular tie to this particular tie. So that it is in your honor that I am wearing this bow tie and look like Orville Redenbacher. I'm not sure I'm going to honor you all day and all night. It might end after this hearing, but what I do know is your friendship has been very meaningful to me. By the way, I was being a witness, as Ms. Wagner was talking about, to those candid banters that we would have at the leadership table. Having sat at that leadership table now for 10 years, 6 of those with you, I know that your style of leadership depends on those of us helping you make decisions, be candid, and I've appreciated the opportunity to serve alongside you and be a part of some very major, significant issues that we've dealt with as a committee. So I know you've got great things ahead as well. I'm going to ask Mr. Ward a question, but first, before I do that, I had the opportunity to meet the young man behind Mr. Ward a little earlier, who's probably cringing with a little embarrassment right now, but I know the pride of a father, but I just want to let Austin know what your dad is doing here is for your benefit. That's what we're all trying to do here. We are trying to make the United States an even better place for you and your generation, and maybe even whatever grandkids you might deliver later on to your dad and your mom. We're here for that, and you ought to be proud of your dad and what he's doing. I know he travels a lot and he's gone a lot and those kinds of things that might be a little tough sometimes, but he's doing this because of you, and we're so glad that you're here today with him to witness this. It's maybe a little boring, but it's really important stuff, so we're glad you're here. And by the way, if anybody takes 30 seconds and talks to this young man, we're probably all going to be working for him at some point in life. So, Mr. Ward, I know you kind of got cut off a little bit on an earlier question about expanding ownership opportunities through retirement. I want you to address that, but I also want you to address sort of the recent efforts from the SEC who have sought to curtail venture and private markets more broadly rather than bolster them, and how would constraining access to private markets, venture capital harm and impact innovation in the country? And I do want to put a little note of caution. I know my colleague from Illinois has walked out, but we're throwing around unsophisticated investor definitions a little too loosely, in my opinion, around into the microphone, because based on what it currently means is you're just not rich enough, all right? Because there's plenty of rich idiots out in this world, and there's a lot of wise middle class and on their way up that ladder types of folks who I would rather put my checkbook in their hands than in the hands of these quote-unquote qualified investors. And so we need to make sure that we are actually distinguishing between those two things. But Mr. Ward, please.
Congressman, thank you. And I'd also like to thank you and Congressman Chairman McHenry. I started CARTA 11 years ago. I started coming to DC 5 years ago. And the two of you were the first to open your doors to me as an entrepreneur and hear my story. So I want to thank you for myself on behalf of all entrepreneurs for your support. Speaking of entrepreneurs and supporting them, one of the areas that I think we can be super helpful to entrepreneurs and the employees that employ entrepreneurs is this concept of private stock being allowed to be used in retirement accounts. So one of the problems young employees face when they work for a venture-backed or private equity-backed company is their two main sources of net worth are usually their 401k account or an IRA, as well as the private stock that they hold. The problem is both are illiquid for them. So if they want to access the liquid stock, because of ERISA rules, it has to be liquid investments, they can't access it because it's a retirement, it's a deferred tax vehicle, it's a long duration vehicle. But if they want to access liquidity in that private stock, they can't access it either because it's private and they have to wait maybe 10 or 12 years for liquidity. And the ability to move some of that private stock into a tax advantage vehicle where that you can match the duration of the stock to the duration of the retirement account and then pull some of the current account liquidity will provide a lot of liquidity, current account liquidity for these employees that they today cannot access.
And I've got so many more questions. I do have one other duty, which, though, Mr. Chairman, is to, without objection, submit some letters of congratulations regarding your tenure here from the Crypto Council for Innovation, the Digital Chamber, and the Blockchain Association. And I just, again, want to say this just seemed cool but inadequate, which is why I dared to snatch this off the neck of one of my staffers and venture out with the new look. I don't know if I'm going to adapt this as a permanent look for you in your memory, but I'm glad to be doing it and just deeply appreciate your friendship.
Well, thank you. Thank you for the indulgence. And I thank you for your friendship and sense of humor. Thank you. We'll now recognize a gentlewoman from Texas, Mrs. Garcia.
Thank you, Mr. Chairman, and of course, I too want to thank you for your many years of service, not just to this committee, but also here on the Hill. It's always been fun for me to sit here next to you while Chairwoman Waters is off in another meeting, and I've enjoyed some of our little private banter. And yes, this is probably the first time I've ever worn a bow tie, but I probably will never again. But did want to show some support and honor your years of service. So I too will promptly take it off before the end of the day. But please know that it's been fun. It's been a good ride, and wish you the best in your next endeavor. Having said all that, I want to go directly into some questions. While I was serving on this committee's AI working group, one of my favorite questions to ask our guests was, what is the quality of the input data being used? Over the past year, we have seen massive growth in generative AI and its use in the financial services sector. Now it relies on vast amounts of data, whether it is sourced from public internet sites or private data sets sold by data brokers. Mr. Butler, I think you alluded to this earlier in response to another question, but could you elaborate on how someone's personal data may be used by AI systems given the current practices in the AI ecosystem?
Thank you for the question, Representative Garcia. I think that part of the problem we have is this technology has been rapidly evolving and expanding in use across the ecosystem, is that the rules that we have around data collection and use really aren't up to speed to deal with the volume and rapidity that you mentioned. And so we don't have transparency into many of these data sources for these AI systems, and we don't have guarantees that information that users are putting into the systems is safe and secure and isn't going to be leaked out or breached or used in some way that they don't know. And so when you talk about those systems being used in the financial sector, there's obviously special concerns around the sensitivity of the information that individuals might put into those systems, and they need concordant guarantees that that data is protected and it's not going to be used in ways that don't serve them or that harm them actively.
Well, I think that's a great goal. I know we worried about people selling our mailing list, and everyone. I still dread the Christmas season. I think I got 8 catalogs in one day last week when I was home for the holidays, and I think Saturday I got another 6. It's like somebody's selling your stuff, but you really feel like, what can I do? So what are people going to be able to do in this new era of AI and crypto and everything else that is even above just selling a mailing list?
Yeah, I think that the scale of the problem, as you mentioned, is substantial and daunting for individuals because we're not just talking anymore about, what are the business practices of the companies that the apps that I download or the companies that I have accounts with, right? It's these second and third level removed entities that you don't even know about. And so I think fundamentally we have to change the way that consumers understand what's happening and give them more control to limit access to those second and third level operators to their information, and really clamp down on that world of data brokerage that's completely outside of the consumer's control, to really better link data collection and use to serve the service that individual is getting from the actual entity they know.
Yeah, I have 2 questions. I'm going to try to combine them in one. Earlier, in response to a question from Mr. Green, he asked about, jobs and the fear of losing jobs. I know that is one thing that many of the people in my district, which is a working class district, about 77% Latino, they worry about all the new technology and all the little robots that can load and unload. And if you're a dock worker at our Port of Houston and you see that the robots and AI are being used more and more, I mean, what can we do to help ensure them that yes, as the gentleman next to you said, you may lose your job, but other jobs will be created elsewhere. The problem is somebody's still going to lose a job, and what can we do for them?
Yeah, I agree. I mean, I think ultimately this is a significant problem in the labor market that has to be addressed through the traditional, bargaining tools and sort of labor support rules that have been necessary in past technological evolutions. I think workers need support and ability to make sure that the rising tide does actually lift all ships, and I think that's a major issue that needs continued oversight.
All right, thank you, and I yield back.
Now I'll recognize the gentleman from Kentucky, Mr. Barr, the chair of the Financial Institutions Subcommittee, a great friend, and I wish you great success in your presentation to the steering committee, to chair the committee.
Well, thank you, Mr. Chairman, and thank you most of all for your friendship and mentorship over these many years. For the 12 years I've served in Congress, every day this institution has been animated by a force of nature, and that force of nature may not have height in stature, physical stature, but height in legacy. And your legacy, Mr. Chairman, is large, and you're sharing the story, and you've shared it with me many times, about your dad. And the American dream that you personally embody makes you the most credible spokesman for American economic leadership. You've been incredibly effective with good humor, with really shrewd political acumen, and I will never forget your mentorship of me over these years when you said to me and admonished me many times, if you try to do everything, you won't do any of it well. I don't think I've followed your advice all the time, but that's really, really good advice. And for incoming freshman members, I'm going to say a very outstanding member of Congress, Patrick McHenry, once told me, and I'll pass that advice down. But again, thank you for your amazing advocacy for innovation, for democratization of our capital markets, and again, being such a tireless promoter of the American dream.
Thank you, Andy.
Godspeed, buddy.
Thank you.
And without objection, I want to offer 3 letters into the record praising Chairman McHenry's extraordinary leadership over these last number of years. And I just have to say, National Venture Capital Association, America's Credit Unions, and the Electronic Transaction Association.
Thanks.
So with that, Mr. Chairman, let me launch into a question, I think a question that you would appreciate. The U.S. has 4.4% of the world's population, but over 50% of capital is raised here. 20 years ago, the U.S. was home to 83% of global venture capital activity, but in 2022, that amount dropped to 47%. That's not good for the American dream. We want it to go back up. Given the large increase in global capital competition, we must foster a competitive environment for venture capital firms. That's why I introduced the Developing and Empowering Our Aspiring Leaders Act, or the DEAL Act, which saves VC firms from the cost and complexities that come with SEC registration and allows them to expand into new markets that otherwise would be unachievable. This is incredibly important for markets around the country, instead of just New York or Silicon Valley, to receive investments from venture capital firms, increasing capital formation for businesses who may be left behind otherwise. This is kind of personal for me because, let's face it, in my home state of Kentucky, there's some venture capital, but the venture capital ecosystem is obviously not as robust as in some of these coastal areas. Mr. Ward, can you please discuss the proximity to the coasts issue, and those of us in flyover country, and the companies and the founders in flyover country in rural Kentucky, how can they access venture capital?
Congressman, thank you for the question. We live under the premise or belief that entrepreneurs will follow capital and employees will follow those entrepreneurs. And so the key to catalyzing an ecosystem, a regional ecosystem of venture capital is to attract the investors. One of the things you can do, of course, is make it easier from regulatory burdens to create an emerging manager fund, and I applaud you and thank you for supporting these emerging managers. We as a country are great at producing doctors, lawyers, accountants. We're not the best at producing entrepreneurs. By sort of definition, entrepreneurs are the aberration, not the rule. And one of the things that I think emerging managers and these investors are very good at is finding and cultivating and growing these entrepreneurs. And so anything we can do to support creating regional markets, not on the coasts, but in Kentucky, in Arkansas, in Texas, where we can get investors together, emerging managers together, and they will become the engine for manufacturing the next generation of entrepreneurs.
Great, thanks so much. And Mr. Coley, a question for you. The U.S. obviously has to stay at the forefront of new technology in the financial sector. Our chairman has been a champion for making sure the United States is a destination and that we are the innovative leader in the world. But AI is a great example of where we have to be the leader for national security reasons, in addition to economic competitiveness reasons. So, Mr. Coley, from your perspective, what challenges are companies facing that prevent firms from achieving the full potential of these emerging technologies?
Thank you for the question. I would say that today, I don't see many challenges for these companies in adopting AI, but there is a risk. I think there is a risk if regulation comes in too fast on open source AI. When you take a look at how startups actually get going, they lean on open source software quite a bit. And with some of the discourse happening around regulation, I do worry about that the regulation ends up restricting the amount of open source AI that's out there.
That's a great point. I think that is why it won't work very well in China, where you have a closed society. So thank you very much to all of our witnesses. And once again, thanks, Chairman, for your extraordinary leadership. I yield.
We'll now recognize the gentleman from Illinois, Mr. Foster, for 5 minutes.
Thank you, Mr. Chairman. And first, I'd like to thank you for your service on this committee. During your time as chairman, you've really embraced emerging technology as a means of facilitating more efficient and accessible capital formation. And while we haven't agreed on everything, I have appreciated your willingness to reach across the aisle and the focus you've given to the technical issues that I think we both agree are going to absolutely reshape the global financial system. And thank you again for your leadership, Mr. Chairman. And I too resonate with the story of your father's business startup. When I was a 19-year-old kid, my little brother and I started this company with $500 from my parents. I guess were our our supporters at that time. And the company now manufactures the majority of theater stage lighting in the U.S. It's got 1,300 employees. It operates in flyover country. It operates out of Middleton and Mazomanie, Wisconsin. It's got about 1,300 employees, about $430 million a year, and it is as of the first of this year, it's 100% employee owned. And this is a real American success story, and I'm very proud that to have been part of it. And now, Mr. Butler, thank you for joining us today and for your testimony that was really focused on the importance of data privacy in developing the financial system. There's been a lot of recent progress in this area made with the finalization of the CFPB's open banking rule and the recent proposal to restrict the sale of personal data via financial data brokers. This cannot go, without a lot of oversight. And now, in my view, and you mentioned in your testimony, identity verification and data privacy really go hand in hand. You cannot solve privacy until you solve digital identity. If you do the simple thing, under most of these privacy regimes, citizens have the right to go up to a company and say, "Show me the data you're holding on me." To which the very next question is, "Who the heck are you?" All right, and how do you prove you're not some scammer just trying to steal the data? The only answer to that, and the one that's being implemented in countries around the world, is to get out your cell phone and present your digital identity certificate. Within the next year, every citizen of the EU is going to have an EU identity app that allows them to prove they are who they say they are, including in an online environment. In India, if you want to give a pauper 3 rupees, you both get out your cell phones, you authenticate to your bank accounts, and you can transfer 3 rupees from your bank account to the paupers with 0 fees. All right, and that is really it's unlocked just a flowering of fintech startups in India. And not only that, India is now selling the software. I think it's distributing it open source to other countries. And those countries are taking it over because they want zero-cost payments, authenticated payments. But the starting point of that is a secure digital identity and the ability to prove you are who you say you are. So I think that is really the next frontier, that if you want crypto you can trust, if you want financial transactions you can trust, you have to be able to deal with this. And also the whole problem with deepfake impersonations. I think probably most of you are familiar with the $25 million heist that happened when a financial officer went on a Zoom with his boss and coworkers, not realizing they were all deepfake impersonations, and was tricked into transferring $25 million into an account that disappeared. This is the future, and it's coming at my constituents and everyone's constituents quickly. So, yeah, Mr. Butler, can you say a little bit about where you see digital identity as being an important key to, lowering costs for fintechs, for KYC, and everything that it's being implemented for?
Sure, and appreciate the question, Congressman Foster. I think that you're right, that this is an area that needs a lot of attention and innovation, to be frank. I think that we need to see especially that our, values as a democratic society are embedded in the tools that use and the infrastructure that we use to secure our systems. I think that one concept I would mention also that should inform the work on identity verification is decentralization. I think for far too long our identities are locked up and controlled by either a governmental entity or a quasi-governmental entity and credit reporting agencies that we don't have power over and we don't have ability to regulate. And there's been a lot of hardship imposed by insecurity in the identity system, specifically over broad overuse of the Social Security number as both an identifier and a verifier.
It's not a shared secret. I can go buy yours for 75 cents on the dark web.
Exactly, right. So, and we need a return to actual functional shared secrets, and also the ability of individuals to control how much of their identity they reveal in any given interaction, because if we look to the physical analog of the driver's license, as that information on those identifications became digital, there was no concordant protection. And they're getting scanned and everything is getting sent off the data.
I'd say that this really should be high on the agenda of the upcoming Congress, and thank you again, Chair McHenry, for everything.
Well, thank you, Dr. Foster, and thank you for sporting the bow tie for the moment. I appreciate it.
Yeah, I have problems with the polka dots, you know. Normally, I would draw the line at polka dots.
The gentleman from Ohio, the Vice Chair of the Digital Asset Subcommittee and the Chair of the Housing Subcommittee, Mr. Davidson.
Thank you, Chairman, and thank you for a great career of service. Thank you for the opportunity to be not just a friend, not just a colleague, but to become one of your leaders and lieutenants as you chair the committee. As I first came onto the committee, I got elected in 2016. In 2017, became a member of the committee. Patrick McHenry was one of the guys that you look at and say, a lot of people underestimate him, and he's used that as a massive strength, very skillfully, and built his influence, not just in this committee, not just in this area of jurisdiction across our entire economy, and frankly, the global economy, because of the role the United States plays in it, but across the conference and in American politics. We saw him become the 55th and a half speaker, or as I refer to him, the triple nickel. And so he did that, and I think in a history will remember him favorably for exercising an amazing amount of restraint and focusing on the mission. I will say if the powers were expansive, he'd probably still be the speaker, but he forced it and said, no, you will pick a speaker. Not an easy task, and certainly not one I think he wanted to have thrust upon him. But as is the case, everything moves on, and I look forward to seeing, Chairman, what you do in the future. I hope our friendship endures well past our service in this body, and I just want to say thank you for your sacrifice and service.
Thank you, my friend. Thank you.
Others have joined that fray, and without objection, I'd ask to enter a letter stating the thanks and gratitude from Cato, and another letter from wrong stack, the DeFi Education Fund. So,
without objection.
So, as you all work in the industry, the market thinks that this is a really good time for crypto in particular, for digital assets, for financial innovation. Ms. Dixon, what is the biggest opportunity and what's the biggest risk as we go into the next Congress?
Thank you so much for the question. It's very nice to see you. The biggest opportunity is, which I want to start with, is the fact that we can actually see this technology grow. We can see this technology flourish. We have traditional financial infrastructure that's wanted to come into tokenization, that's wanted to come into digital assets, and they've been hamstrung a bit because of the regulatory environment. We have a stablecoin bill that's been proposed here. Hopefully we can get that pushed through. We can get market structure through. I think it just opens the floodgates of innovation with respect to traditional financial infrastructure and even those companies that aren't in the finance sector that want to leverage this technology. I think the risk is that we all, that we don't stay grounded in what the value of it is. We need to stay grounded to the opportunities that this technology presents, that digital assets generally present, and we need to stay focused on the outcomes that we want to see instead of craziness in the market.
Thank you. Mr. McCauley, could you answer the same questions?
The biggest risk is also the biggest opportunity, which is we need to make sure that America wins in digital assets. We have won in capital markets, we have won in technology, we have won in the internet. We need to make sure that over the next few years, the U.S. gets established as the global leader in the digital asset ecosystem.
Yeah, thank you, and I appreciate that. That's really well stated. I mean, it's great. The biggest threat, it will be gone. Gensler will be leaving soon. That's great news. The markets approve, and so do I. I wish my legislation had been the tipping point earlier, but I'm glad there will be an expiration date to his time at the SEC. But the opportunity really is that. I mean, if you think about America, we have won since the Industrial Revolution. We did automobiles, we did aviation, aerospace, computing. Everything is dominated, and why would we take a pass on financial innovation? And we really have. And not only taken a pass, actively worked to thwart it. I applaud, look, Joe Rogan did something. Our committee had, I don't know how many hearings on Operation Choke Point in the way people were being debanked, but you look at the power of the media to make some of this stuff famous. Hopefully we can do something about that. And I want to say thanks to Epic. Appreciate your partnership. This year we had a bipartisan coalition, 123 Republicans and 96 Democrats worked together to pass the Fourth Amendment's Not for Sale Act. The government's been shamelessly violating our Fourth Amendment, buying data they would otherwise have to get a warrant or subpoena. couldn't have done it without you. I think one of the things I'd just love you to comment about is the future of privacy, and in particular, the opportunity to do something different than Mr. Foster wants to create, the framework for a surveillance state, maybe zero-knowledge proofs or something like that. What other opportunities are there out there?
Absolutely, and appreciate the partnership and the question. I think you're absolutely right that when we think about the future of our presence in the digital ecosystem, we have to have systems that can enable individuals to actually have control and have a stake in that and not be subject to external control, to constant surveillance. And that really starts with the type of innovations that you're mentioning in terms of zero-knowledge proofs, technologies that can allow people to exist authentically and verifiably in this marketplace without constantly being tracked and surveilled.
Thank you for that. My time has expired, and I yield back.
I thank my friend, and thanks so much, and thank you. It's been an honor to work with you, real privilege to call you friend. Thanks. Now I'll go to the gentlewoman from Michigan, Ms. Tlaib.
No, thank you so much, Chairman. I'm so glad we're talking about surveillance. I think it's really important when I talk to constituents about what is happening. Before I do start, I just, to our chairman, thank you so much for indulging me on the struggles that we have with auto insurance in Michigan. I still don't understand what marital status or people's education level have to do whether or not they're a good driver. But hey, we're going to allow the auto insurance industry to discriminate against people that way and not do anything about it. But I know the chairman cared, so I appreciate that. So digital financials tools, as you guys know, like mobile banking, payment applications, have produced many convenient services, as we know. They've also created unprecedented, just a huge amount of ability for companies to collect and sell our personal data. I hear this a lot. Of course, my constituents at town halls will talk about, my phone is listening to me, but they don't realize some of their actions online also is being collected and being used. And so, Mr. Butler, is it true that companies collect the data for their own use and also they can sell it to data brokers?
Yes, appreciate the question, Representative Tlaib, and I think that you hit the nail on the head. I mean, it's the Wild West when it comes to a lot of these services. There's just no rules that limit, in many cases, what companies collect and how they can use and sell our data.
Yeah, so brokers use the data to construct detailed profiles of individuals, influence whether or not someone can get a job, apartment. I think in one lawsuit, Rent Grow neither vets the third-party information it uses to generate tenant screening reports, nor monitors its services for errors and biases that could harm consumers. Are you aware of that?
Yes, absolutely. And I think that this harkens back also to the point I made in my testimony about fairness. We have some of the policy infrastructure we need to tackle these problems in the form of the Fair Credit Reporting Act and ECOA and the legacy of the 1970s legislation, but we need to carry that forward into the 21st century.
Yeah, I mean, I'm hearing from groups talking about the impact on domestic violence survivors and have faced discrimination based to data broker practices and misuse. And I'm so glad you brought up the Fair Credit Reporting Act. It addresses some of these challenges, correct?
Absolutely. I think that Congress was really prescient in the 1970s and recognizing the trajectory of computing and automation and how that and profiling and how that could impact individuals and really trying to lay the groundwork for what a fair system looks like and what it requires.
Mr. Butler, do you agree, it doesn't matter if you live in Detroit or in rural America, no matter if you're Democrat, Republican, Libertarian, Independent, do you think Americans want this data collected?
No, I think that it is a truly bipartisan issue when you get down to people's preferences for wanting their data to be protected and wanting to feel respected and in control of their own information in the digital marketplace.
Do you know of any other really egregious abuse of this by data brokers?
We've seen really troubling stories in particular that implicate national security, the military. Increasingly, even members of law enforcement come under risk from their information getting leaked online. The risk of physical violence against individuals that can be targeted is severe. We've even seen precise location information being collected and used to target and track individuals. So I think there's real physical world stakes to this as well as the type of bias and discrimination profiling that you mentioned.
I know 18 individual states have actually passed some sort of consumer data privacy laws. I think the European Union passed something called the General Data Protection Regulation. What we can learn from those efforts, that action is needed, but what else, I think for many of my colleagues here to understand the urgency of moving on this issue.
Yeah, I think that what a lot of the discussion today tends to show is that, technology and business models are moving rapidly ahead, and we need to make sure that our policies keep pace with that. So it's really important that lawmakers at the state level, at the federal level, the international level are trying to tackle this, and we really need to get to rules that truly protect individuals and don't just embed the bad practices of the last 3 decades in law.
I know that landlords may engage in discriminatory practices towards a certain group and so forth. Other than the rent grow lawsuit, have you seen any other lawsuits come forward because of the egregious privacy abuse that we've seen with some of the data brokers?
It's a great question. I can follow up on that. I don't have any top of mind, but can follow up on that.
All right. With that, I yield. Thank you, Mr. Chair.
And I thank my friend. We'll now recognize the gentleman from South Carolina, Mr. Timmons.
Thank you, Mr. Chairman. It is hard to believe it's been a little over 5 years on this committee with your leadership, your mentorship, and your friendship. And I just want to say thank you. Thank you for your time mentoring me, and thank you for serving your country. Not only have you done such a great job on the Financial Services Committee, but your steady hand in a relatively tumultuous time is something that we can all agree you've left this country and this committee off better than you found it. So I just want to start out and say thank you. And thank you to the witnesses for being here today. Throughout American history, our nation has been a global leader in innovation, with the financial sector exemplifying the spirit. The strength of our free markets has consistently driven modernization, positioning the United States at the forefront of technological advancement. Generations of entrepreneurs and innovators have leveraged emerging technologies to enhance consumer experiences while creating entirely new industries. As lawmakers, our responsibility is to cultivate an environment that fosters innovation and opportunity, both within the financial system and across the broader marketplace. However, I believe our current leadership has severely deviated from this foundational principle of innovation. In order to thrive, emerging industries require regulatory consistency and security that incentivizes growth and creativity while also safeguarding consumers. Unfortunately, the regulatory policies under President Biden's administration have failed to provide this clarity. Even worse than not providing a clear framework for our economic advancement, we have seen intentional obfuscation designed to force businesses to bend their knee to woke policies. I have great news for everyone listening. That ends January 20th at noon. Agencies like the CFPB and SEC have adopted approaches that hinder innovation, leaving the U.S. trailing behind global competitors, including China and even our allies in Europe, where thriving tech hubs are reshaping the economic landscape. The data is clear. Without a course correction, we will lose our status as the world's leader in innovation. Luckily, the American people have spoken. They want policies that give clear guidance to the business community. They want reduced compliance costs. They want our economy to be the best place in the world to start and grow a business. The Trump administration's goal is simple: use common sense to get the government out of the way, decrease energy costs, maintain a competitive tax code, reduce unnecessary regulations, and provide a clear framework for emerging technologies to thrive. This is our path forward to securing the American dream for at least another generation. I have a very simple question for each of you. Knowing that we have multiple tools in our toolbox, executive orders, legislative action, other regulatory restructuring in the wake of Chevron, what is one thing our unified government can do in the first 100 days to achieve these goals? Ms. Dixon, I'll start with you.
I'm going to take the liberty of saying 2 things. Thank you for the question. I'd love to see the stablecoin legislation go through from a blockchain standpoint, and I'd love to see market structure as well.
Thank you. Mr. Coley?
I'll actually second the stablecoin legislation. I'd love to see that go through.
Okay. Mr. McCauley?
I'd love to see regulatory agencies follow the lead of the agencies' work that they did under the previous Trump administration, where careful, thoughtful rulemaking originated out of the agencies and provided a clear framework for that. The OCC was a leader on that with 3 interpretive letters that helped pave the way for banks to be able to participate in digital assets. I'd like to see those reinstated and pushed forward, and that example held at other agencies.
Thank you. Mr. Ward?
Congressman, I'd love to see liberalization of ERISA rules to allow tax advantage and deferred income vehicles liberalized to allow private stock and private alternative assets to be part of the diversification of those portfolios.
And Mr. Butler?
I would say to promote competition in the market, fair competition in the marketplace that can strengthen protection for consumers, which is embodied, at least in part of this sector, in the open banking rule that allows people to fairly switch between different services while having their privacy protected.
Thank you for that. For anybody watching, we have an opportunity, a generational change opportunity. And we're doing everything we can to create a laundry list of changes that need to be made, either through executive action, through legislation, or through regulatory reform. And while I gave you all one, or in Ms. Dixon's case two, things to propose, we got time and we are willing to work. So create your lists, bring it before this committee, bring it before the Trump transition team, the Trump administration, as they get their people in order. We are going to do what the American people asked us to do and make sure that the U.S. economy is competitive in the global economy, and it is the best place in the world to start and to grow a business. That is our objective, and we will work tirelessly to get it done. And with that, Mr. Chairman, I yield back.
I want to thank my friend, and now recognize the gentleman from North Carolina, Mr. Nickel.
Thank you so much, Chair McHenry, for your leadership. I'd like to start out, even though she's not here, by thanking Maxine Waters, a civil rights icon. It's been an honor to serve with her, and a real pleasure to work with her on housing issues. But Chair McHenry, especially glad to be here with you today. We traveled around the world together, working on digital assets legislation. That CODEL, I think most nights we slept just a few hours because we kept going to meeting after meeting after meeting. But for me, you come to Congress to get things done, to work with your colleagues and to craft legislation. And the work we did together on Fit 21 really has been a highlight of my time here in Congress. In any legislation, you're not going to get what you want all the time if you want to do bipartisan legislation. But we spent, month after month, hundreds and hundreds of hours going back and forth, getting Fit 21 to a place where we could get Democratic support and Republican support. A true highlight of my time here in Congress, and being able to get that over the finish line, the first ever vote for crypto with Fit 21, 71 Democrats joining with Republicans. That's what you come to Congress to do. So a true honor to be able to work with you on so many of these issues. A fellow North Carolinian, grateful for your leadership on this committee.
Thank you. And I want to thank you for your friendship. You've been a great bipartisan leader, a serious legislator, and I know this is not the end for you in public service, and I look forward to your next act as well. But thank you for your friendship and continued friendship, Wiley.
Truly grateful. Thank you so much. For today's hearing on technology and the future of finance, certainly an important one, a great end to this Congress to be able to talk about these issues. Innovation is essential to driving our country and our economy forward. It means cheaper financial services for working families, greater financial inclusion, and financial products that are more efficient and convenient. We need to usher in innovative technologies while ensuring we continue to uphold strong consumer protections. One great example is the need for Congress to create a regulatory structure for digital assets, such as stablecoins. First question to you, Mr. McCauley. Recently, as discussed by Mark Andreessen, more than 30 tech and crypto founders in the U.S. have claimed they were denied banking services in what is being described as Operation Checkpoint 2.0. Certainly no one should be cut off from their bank simply for pursuing innovation. Democrats and Republicans can agree on this. As a founder, have you heard anything about this? Does debanking have the ability to hinder innovation?
Yes, Congressman, it does. We ourselves were debanked, and we attempted to get accounts at 30 banks, including the largest in the country, all of which we were denied. We finally found one that was able to support us, and that one actually supported much of the digital asset industry, which led to concentration risks. And so there's a lot of second and third order negative effects from this. Another one that I want to mention is that many of our clients and people in the digital asset industry grew to distrust the U.S. financial system and the regulatory reliability of the U.S. and decided to move their businesses overseas. And so we have lost a lot of the potential innovation and entrepreneurship to overseas banking institutions due to some of that activity.
Thanks so much. I'm very hopeful this is an issue we can continue to work on in a bipartisan way in the next Congress. Mr. Ward, great to see you. Thanks for being here. As you know, lucrative private investment opportunities are limited to accredited investors. Unfortunately, only millionaires can qualify. As you say in your testimony, this is, quote, investor protection through investor preclusion, end quote. My bipartisan bill with Congressman Flood, which passed the House overwhelmingly, cuts through government red tape and allows folks to pass an exam demonstrating their financial sophistication to become accredited investors, regardless of their net worth. Mr. Ward, North Carolina's research, Triangle Park, is an essential economic driver in my district. Many of the companies based there rely on accredited investors for capital. What benefits would a bill like mine provide for Research Triangle Park?
The Research Park in North Carolina in your district, sir, is well-renowned. We even reference it in Silicon Valley. It's an amazing place. And the more that we can include more investors, particularly that wouldn't necessarily qualify to invest in these companies, support these early stage companies as they build businesses in these different regions, we're very supportive of. We worked with your team on the fitness-based test for accredited investors, and we'd love to continue supporting that.
Thanks so much. I yield back.
Gentleman yields back. We'll now recognize the gentlewoman from Indiana, my friend, Ms. Halchin.
Thank you, Mr. Chairman. Thanks to the ranking member for having this hearing. Thanks to the witnesses for your testimony. Before I start, I do want to say a few words about my colleague and friend, Chairman McHenry. Chairman McHenry was one of the first members I met while I was running for Congress in 2022, and he quickly became one of my most trusted mentors. It was his friendship and guidance that drove my interest in serving on this committee, and like many of my colleagues, I've greatly benefited from his support, counsel, and encouragement. The House of Representatives in this committee simply would not be the same without Patrick McHenry, and I look forward to his continued friendship, excited about what the future holds for him and his family. I do have a few questions prepared. Mr. Ward, as we've discussed today, venture capital plays a critical role in our startup ecosystem. I certainly strongly support making capital markets inclusive for entrepreneurs and investors of all backgrounds. Do you agree it's important that we examine the points of friction throughout the pipeline with respect to those types of investments?
Yes, ma'am, I would, and I think understanding where entrepreneurs are having a hard time accessing capital and then reducing those friction points is the beginning of catalyzing these ecosystems.
And in your view, what are the most important considerations we should think about when evaluating access to financing for startups?
I think the key part is, can we create investor communities in regions outside of California and New York, because the entrepreneurs will follow these investors, the employees will follow those entrepreneurs, just like in North Carolina and Research Park. And the more of these types of communities of investors that will attract the right entrepreneurs to work with them, the more that we can foster American entrepreneurs.
I certainly would like to see more investment in the Midwest, in the great state of Indiana. Innovation is at the center of new technology in the financial sector. It's crucial for regulators to be able to supervise new products for testing and protect consumers at the same time without stifling innovation. To that end, offices of innovation are an important step toward achieving that goal, as are agencies that are using exemptive relief for emerging products and services. So to the panel, if you could just briefly share your view on how financial regulators can operate in the most efficient manner with firms that are utilizing emergent technologies.
I think the most important way, thank you for the question, the most important way is to look at the outcomes that you don't want and try to regulate to that instead of trying to stifle everything. The way to do that is we've been very successful with sandboxes in different countries that they're leveraging that, and pilots that they're leveraging. Those are really great opportunities to not create any kind of regulation or legislation, to wait to see how it sort of grows and fosters.
I'll actually second that on the sandboxing. We actually have a similar experience in Canada, where we had a sandbox for our business there, and it allows you to operate at a smaller scale, build a relationship, let the regulators understand the impact of the technology, and then from there determine how to scale that out.
I have had no end of productive conversations with offices of innovation with many of the federal regulators. I think your point around exemptive relief is really important, and being able to combine the Office of the Innovation and actually give them the authority to go out and use the exemptive relief powers that they have is kind of the key to allowing innovation to happen within new industries.
Yes, ma'am. I have nothing further to add.
I would just add that I think that having clarity in guidelines and regulations is a real important factor to anyone, especially a new entrant in a field.
Thank you. Well, thank you. Under Chairman McHenry, this committee has made innovation and American leadership in the financial services industry our core mission. The industry is stronger, more prosperous, and better able to serve Americans as a result. I'm grateful to the chairman for his 2 decades of leadership on these issues. I look forward to the committee's continued work ahead. Congratulations and best wishes, Mr. Chairman. I yield back.
Thank you. Thank you so much, and thank you for your friendship. Now I go to the gentleman from Colorado, Ms. Pedersen.
Thank you, Mr. Chairman, and thank you all for being here today. Members have a lot going on towards the end of the year, so I apologize I couldn't be here earlier for some of my questions that have already been asked. But before we get started, I just want to congratulate Chairman McHenry on the final hearing after decades of public service. It has been incredible to work with you, and even though we don't agree on everything, I appreciate that you gave this freshman the opportunity to work across the aisle to actually get some important amendments through and work together in a bipartisan way. That's how this place is set up to function, and I hope that we can see more of that in the future. And Mr. Ward, from you, and I apologize once again if you've already talked about this, but you mentioned in your testimony around having to move from Austin to San Francisco to secure funding for CARTA to get off the ground. What do you think that we need to do to support both founders and emerging managers to invest in places outside of Silicon Valley, places like Colorado?
Thank you, Congresswoman. Boulder and the Denver area has actually an early but thriving venture scene. We have many customers in the region, and when I talk to them, particularly in Colorado, the more that they can bring fellow investors to the region, because the entrepreneurs will go to where the investors are. And if you have a catalyst or a critical mass of investors in your region, entrepreneurs will come, employees will follow the entrepreneurs, and you'll start to catalyze an ecosystem. That's how San Francisco and Silicon Valley started. That's how New York has risen to ascendancy, and I think that can be true in Colorado as well.
Thank you. And another question for you, something that I know one of the biggest barriers that we face to leading the world on AI is making sure that we can meet the energy needs. And when I think about Colorado, we have many innovative energy companies. We have geothermal, we have solar, we have numerous opportunities. We have natural gas to actually support our energy needs. But what do you think that we need to be doing now to make sure that we're looking at how do we incentivize and create the opportunity to invest in some of these innovative energy companies to meet the growing need? It's something that really worries me in terms of competing with China, but it's also, of course, the consequences if we don't look to new technology, to new innovation to meet our energy need around climate change.
Congresswoman, it makes me smile to tell the story that one of the first customers of CARTA, when we launched 11 years ago, I think they were the first 10 customer, was an entrepreneur named Yoav, who was in Denver, and his company was called Simple Energy. And Colorado has had a long history of driving innovation on the energy side. I think that can continue to be true. And when we look at many of the venture firms that are there, like Foundry Group, Hannah Gray, Rocky Mountain Capital Ventures, many of them are taking an energy focus in their fund thesis. And I think the more that you can bring like-minded investors who want to focus on energy as their thesis in their investments, you'll bring more of those energy companies and energy entrepreneurs to Colorado.
Great, thank you. And then Looks like I have a minute left, so I don't know if you have anything that you'd like to highlight that we should be focused on around AI as we go into the next 2 years.
Carta, we're big supporters of AI. We believe it's an incredible new tool for us. The one suggestion I have as we think about regulation around AI is any new technology, sufficiently good technology, looks like magic when it first appears. So again, imagine the people that were using the slide rule and then they discovered the calculator. It looked like magic. When computers first came on board, it looked like magic. Internet looked like magic. AI looks like magic. Earlier, one of the congressmen was talking about Terminator, one of my favorite movies. I'm not sure we should look at Hollywood movies as a way to think about policy. I have this thesis that if Terminator was a feel-good movie, we would be talking about AI very differently today. And so I encourage you to take a balanced but progressive and liberal view to AI regulation.
Great, thank you so much. I yield back.
Thank you, Ms. Pedersen, and thank you for your leadership on this committee and the important work of the legacy of your family you're carrying out in public policy. It's very important, and grateful to work with you. We'll now go to the gentlewoman from California, Mrs. Kim, for 5 minutes.
Thank you. I, too, would like to take a moment to thank Chairman McHenry for his leadership and the vision at the helm of this great committee called the House Financial Services Committee. It's been a pleasure and honor to work with you. Your leadership has also transcended the work of the committee when you led this body as a Speaker Pro Tem. And your unwavering leadership and perseverance during those uncertain times was very inspiring to me. And we all will be missing you and your leadership. But don't worry, I still have your cell phone, so you'll be hearing from me frequently. So thank you again. And I want to thank all of our witnesses for appearing before our committee today to discuss the innovation in the financial services industry and how it can improve the economic opportunities for millions of people. And so today I want to touch on the recent growth in the private markets and how technology could help investors from all backgrounds responsibly tap into those gains in the markets. According to Bloomberg data, over the past 3 decades, a number of publicly listed companies has fallen to more than 8,000 firms to just above 4,000. Additionally, according to Ernst & Young, the private markets doubled in growth from $9.7 trillion in assets under management in 2012 and are estimated to have reached $24.4 trillion by the end of 2023. So the question to you, Mr. Ward, in your testimony, you speak about broadening the reach of private capital. So can you elaborate on how aligning stakeholders on best practices and standards and modernizing the infrastructure can help the private markets, and how could technology play a role in all of this?
Thank you, Congresswoman. When we started Carta 10 years ago, the thesis was venture-backed companies were investing in the best technology companies in the world in the same way that we finance the railroads. You would sign a bunch of papers with wet ink signature, you would receive a paper stock certificate, and you would file it in a cabinet. And one day, this company would go IPO, you would turn it in to the Depository Trust Corporation or a brokerage, and then it would become a modern investment. The Carta thesis from the beginning has always been, can we take the same modern infrastructure in the public markets but start applying it to the private markets? And that will unlock both entrepreneurship as well as diversification for investors who want more diversification outside of just public equities and fixed income, but they can diversify into alternative assets. The more that we can bring technology and innovation into the private markets, because that's where innovation is happening, the growth of that sector will increase more entrepreneurship in the United States. And I think that's where we should be looking for a policy.
Thank you. Let me ask the question to Mr. McCauley. How do you envision tokenization of real-world assets transforming the way average Americans interact with financial products and services? Could you also describe specific use cases and potential use cases that are being developed?
Congresswoman, thank you for the question. I think the the biggest example so far we're seeing in tokenization is with BlackRock's tokenization of their money market fund, where they've taken a traditional money market fund and made it representable on blockchain. This allows for 24/7 instant settlement. It significantly reduces counterparty risk if you can settle 24/7 and instantly. And I think it's a test case for what we can do over time, where more and more traditional assets can be registered on the blockchain and settled more quickly. We had last year, or within last year, a lot of celebration about moving to T+1, which is still kind of funny that that was a massive leap forward. I think there's a lot of further innovation that we can do there that will reduce risk overall in the system.
Thank you very much. You know, Mr. Coley, Chairman McHenry has been working to enable crowdfunding for over a decade in Congress, and I view crowdfunding as a way for founders who would otherwise be overlooked by traditional funding sources to raise the capital they need. So can you explain why a startup would choose to raise capital through crowdfunding?
Yes, thank you for the question. There are actually two reasons why startups would raise via crowdfunding. One is to actually raise capital from their customers to help incentivize their customers and help to have them take part in the upside of the company. But the other one, which is more important, is venture capital is meant for venture backable startups. That means they're going for a very large outcome. Think of it like a Google or a Tesla or NVIDIA. But there's a huge a set of businesses that don't have that ambition and would still like to raise capital, and that's where crowdfunding is very important.
Thank you. My time's up. I yield back.
Gentlelady yields back. We'll now go to the gentlewoman from Massachusetts, Ms. Presley.
Thank you. Before I begin, I want to congratulate Chair McHenry on his incredible tenure, both in Congress and as chairman. I admire your willingness to work across the aisle and appreciate very much the working relationship between you and Ranking Member Waters, even when you have both harbored very strong opinions. We thank you for your service and congratulations on the next chapter. Again, thank you, Chair McHenry, for convening this critical hearing on fostering innovation through technology and finance. Emerging technologies like artificial intelligence are reshaping our financial landscape in profound ways. It is essential that we examine both the benefits and the risks. I represent the Massachusetts 7th Congressional District, a thriving hub for innovation, tech, life sciences startups, and minority-led ventures. And I'm interested in how we can leverage technology to create more opportunities for all entrepreneurs, especially those from historically underrepresented backgrounds. We've seen how technological advances can sometimes exacerbate existing inequalities, and we cannot allow that to be the case with AI in finance. Mr. Coley, AngelList plays a vital role in promoting entrepreneurship and accelerating startup growth. And I understand that small businesses in the Commonwealth of Massachusetts use your platform. How is AngelList leveraging AI to expand access to capital for entrepreneurs, particularly those historically underrepresented? Can you provide some specific examples?
Thank you for the question. At the core premise of AngelList, what we're really looking to do is to reduce the transaction costs. And what we did a few years ago was reduce the transaction costs to actually create a venture fund. Before AngelList, you'd need to raise a minimum venture fund of, let's call it $50 or $100 million. But in order to do that, you'd have to have the right network. You'd have to go work at a large venture fund to build that network. What we've done is we've actually brought that down so you can actually now raise a $500,000 venture fund. What that does is that actually allows a lot more people from even diverse backgrounds start a fund very, very quickly. And then what happens is when they raise a fund, they end up investing alongside their local communities. And so our role has been to bring the cost down so more people can start a fund and then back entrepreneurs across the U.S.
Thank you. And what safeguards do you have in place to protect retail investors from undue risk when using AI-powered investment tools on your platform?
So with AngelList, the retail investors aren't actually participating since AngelList is only allowed for accredited investors and up, and so that actually fits the accredited investor threshold, and we don't really have retail customers as clients.
Understood. Okay. You know, I've heard from entrepreneurs who are leveraging AI tools and reaping the rewards of innovation, but I've also heard from constituents who are deeply concerned about how their financial data is being used and shaped by tech companies who have proven time and again that they can't be trusted, honestly. So as we embrace these technological advancements, it's essential that we create a regulatory framework that fosters innovation while ensuring robust consumer protection. Mr. Butler, the concerns around data privacy and AI are particularly pressing, especially given the public's discomfort with their data being used to train AI models without their explicit consent. Based on the current practices in the AI ecosystem, can you elaborate on how users' personal data may be used by AI systems right now?
Sure, and appreciate the question, Representative Presley. I think we've seen all too frequently in the last few years companies roll out new AI tools that automatically select all their users' data to be fed into the training module and require those users to proactively dig through settings to turn that off. I think this is not a user choice enhancing trend, right? And the fact that we don't have comprehensive regulations in this space has allowed this to happen. I think that if companies are going to try to, incentivize their users to provide some amount of data for training, that needs to be a user-driven choice and not a platform-driven choice that users have to dig their way out of.
Thank you. As members of Congress, we have got to get this right. We need to harness the power of AI to create more opportunities in our financial system, but we must do so in a way that protects consumers, promotes equity, and expands access to financial services for all people. And before I yield back, I wanted to welcome the young man who's joining us today for this critically important civics lesson. We've enjoyed having you. Thank you.
Thank you, Ms. Presley. We'll go to the gentleman from Wisconsin, my friend, Mr. Stile.
Thank you very much, Mr. Chairman. I'd like to recognize your time and your leadership in this committee. As we look around this room, there's a number of men and women that are on the walls today or will be in the future, and soon your portrait will be there. And as we look up every one of these portraits, I think you recognize both the substance and the style of the man or woman who is or will be on this wall. It's hard to paint in the substance, and that is your knowledge, your understanding of how this institution works, in particular, not only in this committee, but your leadership as Chief Deputy Whip, as I would call it, the 55th and a half Speaker of the House, and your true leadership as Speaker Pro Temp in this institution during a challenging time. In your leadership shown here on this committee, your ability to truly deliver policy, to work across the aisle, to navigate the intricacies. That's hard to paint. But I think what people will look up and recognize is the style, which is your signature bow tie. A cursory review of the history of the bow tie says it dates back to the 30 Years' War, which was a darn confusing period of time in European history. And sometimes those of us here in Congress feel like Congress may be as confusing to understand today as the 30 Years' War is to understand for those of us that appreciate history. It would turn into a French fashion statement, and in the United States, somewhere in the 1880s, it became a staple of fashion in the United States. This committee really dates back to 1865, after the Civil War, when it was the Banking and Currency Committee. Would take on a lot of the role of what the Ways and Means Committee had done up to that date. Would take the name of financial services, I believe, in the 1960s. And so when people look up, I think they'll recognize that you were probably not here back when this was still a staple of fashion. Although there may be a young man or a woman who arrives in this committee room decades from now that will look up and wonder if you were the chairman in the 1880s. But upon research, they will recognize your hard work and dedication, not only to this committee as chairman in this term, but really your dedication to the institution, the United States House of Representatives. And so I look forward to the day where we're sitting here and your portrait is on this wall. It will unquestionably capture the style of your work with a signature bow tie, I trust, but it will never capture the true substance that you brought to this committee and this institution. We're thankful for your leadership, Mr. Chairman.
Thank you, my friend. Thank you, my friend. I very much appreciate it.
I'll be brief with my remaining time, and I apologize that I'll leave it short on the substance here. But I want to go to you, Ms. Dixon, if I can. Very interested as we think about tokenization of assets. I think it can really lower costs. anytime new technology comes online, the human mind is really good at identifying potential risk. I think we're not as good at identifying the benefits. I think that was true when the ATM came online. There were headlines that said, bank tellers will all lose their jobs as money robots operate. Obviously, it didn't come to fruition. Actually, really improved a lot of jobs in the banking industry, and we found good safeguards to prevent theft and fraud. As we think in Congress, in particular, my concern about illicit finance, there's a lot of discussion on this point. We're good at identifying risk. There are concerns that illicit actors could utilize it. What are some of the safeguards that we should be thinking about in Congress as it relates to preventing illicit finance from utilizing digital assets?
Thank you for the question. You've highlighted the tokenization piece, which I think not only, just to give you a dollar point on that, Franklin Templeton has said that 50,000 transactions used to cost them $50,000 to clear and settle. On Stellar's blockchain, 50,000 transactions cost them $120. So it's a big, big difference. So it does get to the place where this is really beneficial for not just the individuals on the edge, but it's also really beneficial for the companies that are leveraging it.
Do we need to revise some of our rules and regulations as it relates to preventing illicit finance in this space, or do you think the rules are in place are sufficient?
I think that the rules that are in place are sufficient. We're dealing with technology that is transparent. We're dealing with technology that provides so much more information than we've ever had in this ecosystem. You can actually follow the asset from the date of creation all the way to where it is today. That is not something you can do with a paper dollar. So I think that we actually need to take a step back and look at so many of the tools that we have available to us and leverage those tools before we create any changes to the legislation around illicit finance.
Thank you very much. Thank you, Mr. Chairman. Thank you for your leadership, your counsel, and I do look forward to your portrait being on the wall. I yield back.
Mr. Stile, thank you, and thank you for your long-term friendship, your advice and counsel, especially when I was Speaker Pro Tem. And it's been a pleasure to serve with you on this committee. I will say, when you see the portrait, you're going to think, gosh, I thought he was shorter than that.
Hire a good artist.
Yes. And now we'll go to the gentleman from Nebraska, Mr. Flood.
Thank you, Mr. Chairman. Mr. Chairman, before I begin with my questions for this hearing, I understand this is your last hearing in Congress. With that in mind, I'd like to take a moment to recognize you. I don't know how much you'll miss this place. I suspect you're more excited to spend time with your lovely wife, Julia, Cecilia Rose, Reese, and Perry, but I promise that your colleagues will miss you dearly. Your tenure stretches well beyond my time in Congress. I'm still new. I've only known you since July of 2022, but since then, your leadership of this committee has been nothing but remarkable. This committee has passed data privacy legislation to keep Americans' data from being exploited, capital formation legislation to create more opportunities for startups and investors alike, stablecoin legislation, which is a particular interest to me, digital asset market structure legislation, and so many other initiatives that would spur growth and reel in out-of-control regulators. Your focus from the beginning has been making America a leader in innovation in a land of opportunity for all, and you have done historic work. You're a pioneer, especially in the digital asset space. Finally, I'd like to take a moment on our personal relationship. I think all of us in this room remember what it was like in the days and months after we were first sworn in. We all come here to represent our districts and hopefully make some positive changes, but none of us can do it alone, and people like you make people like me feel welcome. And so since I was sworn in 2022, I've been impressed by your leadership, watch you in difficult situations, situations that no other American has ever been in, specifically a 23-day Speaker Pro Tem, where you rightfully and thoughtfully chose not to use the power that you could have used because of the precedent it would have set. And I think it will be generations before Americans understand what a gift you gave our country during that time. So with that, thank you for your leadership, and I would like to have a say in what is in the portrait. So.
Thank you, Mike. Thank you.
With that, I have a couple questions, and it's great to have Anchorage here today. Mr. McCauley, here's my concern. Regulators don't have the human capital to keep up with the pace of innovation. We need regulators to be good. We need them to be capable of protecting consumers, but also allowing innovation. You are definitely in this space. What do you think we can do as a government to make sure that our regulators have the human capital they need to be able to adequately regulate the digital asset space?
Congressman, this is a fantastic question, something near and dear to my heart. I spent a lot of time with federal regulators. I think one of the quickest wins that we could probably have there is to allow our federal regulators to be owners of crypto. Right now, the government ethics committees do not allow them to own crypto, and so many of them are themselves not allowed to play with Bitcoin, play with Ethereum or other assets, and this slows down some of the understanding that they would otherwise get. And so I think that would be a very quick win that would help there. Generally speaking, as more and more the federal regulators become versed in crypto, I think they should follow the lead of the regulators who have invested in this area, put together teams that focus on this, and I think the OCC has been a great example there.
Thank you very much. Ms. Dixon, considerable work has been done to create a dollar-backed stablecoin, something that I'm very passionate about. I think it's time for this to happen. It's my hope that a payment stablecoin bill will pass through both chambers of commerce and will be signed into law by the president. What does this mean for the future of stablecoins, and what opportunities will this unlock for the average American consumer and small business if we get the stablecoin legislation done?
Thank you so much, Congressman. I always thought that this stablecoin legislation was the low-hanging fruit. And apparently hasn't come out to be that, because we haven't been able to, with all the work that you've done, still haven't been able to get it through. I think that stablecoin legislation provides unique opportunity to be able to not only set the United States up as a leader, because we will be the first one who have come out and purposely set the direction, and also have 99% of the stablecoins in the world are US-backed stablecoins. So we'll be stronger from that standpoint too. What Americans will be, and also folks outside the U.S. will be able to do, is send and receive value in seconds that's stable, one-to-one backed value. And that is very, very important, not just to the creativity of what the financial system could be, but also just leveraging value that that others outside the United States couldn't hold.
Very well. Thank you very much for your testimony, all of you. And with that, I yield back.
Thank you, Mr. Flood, and thank you for your friendship. And now we'll go to the gentleman from Iowa, Mr. Nunn. And I hope the tie does not get you in trouble back in Des Moines. But we'll say it's probably brief that you have this on. I'm grateful for your silent tribute.
Well, Speaker Pro Tem Emeritus, your tenure may have been short, but your legacy will long shine over the United States. Both in your time in the dais on the floor, but equally important, your time here in financial services as a chairman. Patrick, it has been a privilege to get to serve with you, and I mean this sincerely. In your last time here as our chairman, you helped be a mentor to so many of us in this room on both sides of the aisle, and worked effectively in helping me pass my first piece of legislation, the Financial Technology Protection Act, which passed unanimously in no small part to your hard work and guidance, and also helped us with our AI Plan Act. You have led on innovation in Congress and used this committee effectively with some of the brightest minds in our country to be able to help champion this for our nation. And equally, you have always been a strong advocate for the men and women of North Carolina. But most importantly, you've inspired all of us because you're a great dad, and you remind us what's truly important. So we salute you in your next chapter, my friend. You've also set us up for success here, and I hope that Congress will act quickly, not just on the bipartisan bills that you and I have gotten to work on, but as we move into this next chapter in 2025. The next Congress must look for solutions that provide innovators with regulatory clarity and give consumers more choice, that increase access to capital, that break down barriers for small businesses, and make Americans the #1 place for innovation. I am confident that we can achieve these goals in a bipartisan manner as innovators, consumer protection, financial inclusion impact all Americans, regardless of their political background. So with that, I'd like to get started. Talking to another great dad, Mr. Ward, and little Mr. Ward. You look sharp in that suit, brother. Like many people in this room, I hear from my constituents about their ability to access cash, grow their business, and bring jobs to places like my home state of Iowa. Now, we are both Midwesterners, and I know that businesses in the middle of America face greater difficulty in raising cash and resources. In your view, what are the most important considerations to increase capital and lower barriers for small companies in locations like being in the heart of the heartland?
Yeah, thank you, Congressman. I continue to believe that entrepreneurs will follow where investors are. And the more that we can attract investors to your local communities, the more that we can create critical mass around those investors, that will bring the entrepreneurs, that will bring the employees. And it's a feedback loop. It's a snowball effect. You bring a few investors in, they bring a few entrepreneurs in, they start a few companies, they bring employees, and those employees, those entrepreneurs then go on to be local investors. Those employees go on to be the next generation of entrepreneurs, and that cycle starts. It's a 10, 20, 30-year effort, but we're seeing this happen in other states that aren't on the coast, and I hope to see it in Iowa as well.
I think across the Midwest, we have a great opportunity with this, and using your model going forward, I think is an ability for us not only to get more capital in, but to continue to grow these homegrown innovations at frontline users across the country. Mr. McCauley, I'd like to just highlight here on the technology piece, blockchain. It's going to serve as the building block for the next generation of internet technology. We must ensure this next generation exists right here in the United States and isn't created in a place like China, candidly. The Anchorage Digital, your firm, was recently approved monetary authority in Singapore to receive a major payments institution license. Can you compare it to your experience here in the U.S. With the OCC's approval?
Thank you, Congressman. Fantastic question. What we've experienced with the Singapore Monetary Authority is a long and comprehensive process in order to become licensed there. Some of the high points that I think they've done really well are clear process and clear understanding of what the rules are for institutions that participate in the digital asset industry, and clear guidelines on the tokens. They have clear delineations on what are utility tokens, what are payment tokens, what are security tokens, and clear enablement or restrictions on what you're able to do with those against the entities. And so the clarity there has been wonderful.
And that piece is a playbook item that we could bring here, I think, to the United States as well. You've proven it to be successful, so I thank you for that. With my limited time, I want to say to my colleagues in Iowa, I took a man from North Carolina to show me how to be fashionable. And even if only for a day, my friend, Mr. Chairman, thank you for all the mentorship you've given us. This may be the last time that we officially wear this here, but we are grateful for your leadership on it.
I don't want to get you into political
Thank you,
trouble
Mr. Chair, I yield.
for the bow tie, but Zach, thank you. Thanks for your friendship as well. Thank you for being a great leader. You were the penultimate questioner this day, and now we have the ultimate questioner, and the gentlewoman from Texas, Mrs. Dela Cruz, is recognized.
Well, thank you, Mr. Chairman. And like many of my colleagues, I want to say thank you for your leadership. You have inspired me to forge forward even in difficult waters and find common ground, not only with the people on the other side of the aisle, but sometimes with our own colleagues on this side of the aisle. And what I have really admired about you was your sense of humor during not only our troubled storms, but sometimes our difficult discussions right here in this committee, here in our committee hearings. And so you always lightened the mood with your sense of humor. You inspired me to find common ground and be able to work in the spaces that we can find agreement with. And with that being said, I thank you for pushing forward and supporting South Texans and especially our veterans. I feel very honored that today we're going to pass off the House floor a piece of legislation that you actually promoted forward and that was near and dear to our heart, which was and still is our veterans. And so today, working with you, we're going to ensure that our nation's disabled veterans have fair access to housing. And I know this was something very special for you. And so I am so thankful that you've given me the opportunity to press forward in that area. So God bless you, Mr. Chairman. God bless your family. And you and your sense of humor will certainly be missed. With that being said, I thank you to the witnesses. Today is a special and a sad day for us, but we must move forward to important topics like these that we're discussing today. I will start with Mr. Ward and Mr. Coley. We know that regulatory barriers can often disproportionately and negatively affect smaller businesses, which make up 99% of all businesses and employ half of the country's workforce. That being said, given the importance of small business growth to overall job creation, can you describe how benefit firms like yours provide help to the end consumer or the end users as well?
Ms. Congresswoman, thank you. I would say that one of the things America does extremely well is make it easy to start a company. And I've been in other countries around the world where it's much, much harder to start a company. And the more that we can do as policymakers to continue to reduce the friction and cost of starting companies, finding capital, the more that small businesses can thrive. And we're not talking just venture-backed startups, but small businesses of all forms that need access to equity capital, access to debt capital, access to operating capital. Capital is the lifeblood of small business, and the lower cost of accessing capital and starting companies will create more entrepreneurs in the United States.
Thank you for the question. The thing I would add to that is, in addition to lowering the cost of starting businesses, I would also look to make it easier for international capital for our allies to actually come in and invest in the country, into the startups. We actually see there's a lot of demand for it within the public side. You regularly see investors across the world investing in the U.S. public markets, and we should make it a lot easier for them to invest in the U.S. private markets as well.
Thank you. As a small business owner myself, I started from humble beginnings, and it was because I had access to capital that allowed me to open my first business. I remember an ornament business at the mall with $20,000, and I thank my community bank for allowing me that opportunity because they did give me access to capital and gave me the first olive branch to say, let's see what you got. And only in America do we have that great opportunity. Thank you so much. I yield back.
Gentlelady yields back, and I thank you for your kind words as well. And I'd like to thank you all for your testimony. I'd like to thank the panel for the testimony. This is a culmination of 20 years of work, and it's great to see folks from different phases of my policy work here in Congress. And great to see the good work that each of you are providing to the real economy and to people not just here in the United States, but globally. And I want to thank my colleagues. This is a special place, a special committee. I spent all 20 years of my service in Congress in this committee room. And I've learned a lot from the people I've gotten to serve with before me and from the folks I'm serving with now. And it's been truly the privilege of a lifetime to serve in this institution. It is a good place, and it can produce good and just results if we insist on it. And that means we've got to work together, we've got to listen to each other better, and that's always a struggle because there's so much noise about us. But I'm very grateful for the opportunity to serve people of my district, Western North Carolina, and to serve with my colleagues here in this room and in this institution of the House of Representatives, and to serve the American people. But I'm grateful for my staff, really grateful for the team I've gotten to work with, and I'm grateful for their sense of humor and seeking a little revenge on me today with a little bit of inside jokes here and there. In particular, Aaron Mehmet, Grace Tricome, Lindsay Shackelford-Bordeaux, and Allison Bahuniak, who were key instigators of this day, and my staff director, Kim Betts, who has a wicked sense of humor. if often bizarre, but that's why we get along. And grateful for you, Kim, and two previous staff directors that I've been honored to have here on the committee. So thank you all. Thank you all for your time. Thank you for your testimony. Without objection, all members will have 5 legislative days within which to submit additional written questions for the witnesses to the chair. The questions will be forwarded to the witnesses for a response. I ask our witnesses to respond as soon as possible, but no later than December 30th, 2024. And now the hearing is adjourned. Thank you all. Thank you. No, the committee's adjourned. All right.